Morning, everybody. How are we all doing? Happy Monday. It's a bank holiday week. Time off. How are we all doing? Morning, Steve, Ian, Pot. How are we doing? Good morning, Euro Swiss. No, my name's Lee. I think you're on the wrong stream. Euro Swiss is some other bloke. Morning, Mark, Edward, Evil, Baggy, Virginia, Philip, JC, Fidelis. Morning, Monkey, Neo. I've heard this is the best live stream currently on YouTube. Correct. Not sure who told you that, but correct. Morning, Gregors, Kennelly, Tina, Yotko, Michael, Senji. How are we all doing? Euro Swiss. We'll have a quick look at Euro Swiss. Let's come down back into the bit. Back into the bit where it went from. I'll have a look at it in a minute. So, Monday. We've got a very light news week this week. And obviously we've got bank holiday Friday and a bank holiday on Monday. So this week's going to be, I think, a little bit light on the ground. So we'll quickly run through the news, obviously, to start off with, have a look at what's coming up. We'll have a look at what's happened over the weekend news. And then basically just whiz through all the pairs basically today and have a look at everything, where everything is, see if there's any decent support, resistance, bounce opportunities, and just sort of have a look at everything, really. So just quickly covering the weekend news. I've had a scan through this morning. There's not a lot over the weekend at all that's really of any impact, apart from this. So we've had the Japanese talking a lot about what's been going on with the currency rate changes. Morning, day trader. So Kanda basically came out this weekend and said, we are closely watching FX moves with a high sense of urgency. So for those of you who've maybe not been in the stream before, we have intervention moves on the Japanese yen where they basically liquidate overseas assets and buy a load of yen when they're unhappy with how far the US dollar yen is pushing against themselves, basically. So at the moment, we're up at the levels where they like to intervene and say, screw you lot, we're going to dump it. So this is what they say before that happens. So one of two things will happen. Either the market listens and they start to drop the US dollar yen, or the market ignores them, carries on rallying, and they drop the US dollar yen. Either way, when this sort of noise comes out from Japan, typically we see a drop, and it tends to be fairly quick. So we've had this, watching the FX moves. We see speculative moves in the Forex market, i.e. banks and institutions looking to make money out of moves against Japanese. Current weakness of the yen is not reflective of the fundamentals, i.e. we completely disagree with you devaluing our currency. We've just increased our interest rates, you idiots. Why are you not buying us? Yeah, exactly what I've been saying for the last few weeks. That move last week on the yen was not normal. Yeah, when interest rates go up, currencies power up. They do not power down. Yeah, what happened last week with the depowering of the yen is the banks pushing against the Japanese. So basically, they're just saying, all of this is saying, if you do not stop this, we will stop you, basically. So if we have a quick look at the US dollar yen chart and where we currently are in the grand scheme of things, we're obviously up at all-time high territory, which we hit last week, bounced from, hit it again, bounced from again last week. So this is the start of an M pattern reversal. You've got a reversal alert that's gone in. And this is the scene of the last previous interventions that we've had. So if we go back to the previous intervention at that level, which was here. So we had an initial intervention put in at 145, where the Japanese, again, what I've just shown you there on Financial Juice was the Japanese saying, if you push us further, we will push back. They pushed down. The market pushed back against them. They said, if you carry on doing this, we will intervene. They pushed back down. They pushed back up. The Japanese basically went back 500 ADR. The move then settled at that level, pushed against them. And they said, again, approaching the 150 level, do not push us. We will push you back. We got to that level, and then we put a massive 700 ADR, 700% of its average daily range move in an hour or two, where the Japanese just basically said, right, screw it. all the US bonds, sell them, sell the lot. And they liquidate all that US money and they turn it into Japanese money, which means the US dollar yen collapses. Yeah. Then they put another move in there. Then they put another move in there. And from that moment on, there was no turning back. Yeah. This is exactly what happened here. We had a warning. We had an intervention. We had a second warning. We had a second intervention. They pushed up. Luckily, the market then went, yeah, all right, we saw what you did to us last time. Banks and institutions will be offside. If they are selling the yen, selling the yen, selling the yen, buying the US dollar, buying the US dollar, and the Japanese move at 700 ADR against them, exactly the same as us. If we're the opposite side on that, the banks and institutions are in a hell of a lot of debt, massive drawdown. They do not want to be in that. So this is what they tend to do when they get these warnings. We've pushed up again, back to that level. This is where the Japanese said, carry on and we will intervene. The market sat there for 3 weeks and thought about it. And then it went, yeah, all right. And then the interest rate changed. Here, what the market should have done at that point is buy the yen. What they did was sell the crap out of it. Now the Japanese are again saying, guys, stop it. It's ridiculous. We've just increased our interest rates. It means you buy us, you don't sell us. So they're saying the same thing. So again, really good news for anybody that is short on anything against the yen. If you're long on it, get out. Stay short. So we've got the M pattern reversal gone in. Yeah, reversal alert we got there on, I think it was on Wednesday last week. It then pushed up and we just tapped the high. Limit orders triggered, drove it straight back down again. Reversal alert's gone in. So we're looking for this level to hold. If they push above that 152, it's all over. So I'm short at the moment. Got two positions on it, one there and one here. As you can see my average there. I have no TPs on it, purely because if they do put in a 700 ADR move, let's mark it on the chart. We are 109. So 700 ADR will be somewhere in the region of that. Yeah, so you'll have literally 1 4-hour candle that will look like that. Will be down here. Yeah, so if it happens. If it's a small intervention, you might only just get down to the previous week's low, which would be about 500 ADR. So, but we'll see if it happens. If it doesn't happen, and they do not need to intervene, i.e. the market just pays attention, we're going that way anyway, yeah? So that's the only news we've had this week, this weekend, and it's all basically this same stuff. Sudden Forex movements are undesirable. We are to prioritize excessive moves over levels in a comprehensive decision making. It's just all the same stuff. Just I'm pointing a gun at you. You push me, I push this. Yeah, basically is what they're saying. So if you're long on the yen, just be careful. If you're using a stop loss, make sure it's nice and tight, because when you do lose the money, you want to lose as little as possible. Apart from that, not a lot else. We had the Japanese. I've never really followed this, but the Japanese leading indicator change revision has come out as a negative. I don't even know what that is. I've never followed this one. It does come out as red, and I've looked into it in the past, and I've looked at it and gone, I'm not quite sure what that does. So I haven't really paid any attention to it. So that's all the other news we've had this morning. So this week, today, we have new home sales. Does nothing. So there's no news today. The only news we've got is at 2 o'clock this afternoon with the new home sales. Tomorrow, we've got the US consumer confidence at 2 o'clock. Other than that, we've got bits and pieces trickling in before that at 12:30 with the core durable goods, etc. Richmond Manufacturing Index. So if these all come out as sustained positive or negative numbers, i.e. they're all the same, they're all positive or they're all negative, we probably will get an ADR move or so in the US dollar up or down. Other than that, not a lot. The consumer confidence is very hit and miss. Sometimes it's a big mover, sometimes it's not. It depends what the market needs to do and what other news is going on. But this week, not a lot. So I will be streaming tomorrow afternoon at 1:45, and we'll be on for that and see what happens there and see what's happened with the FX market tomorrow afternoon. Wednesday, the only news we've got is CPI for the Aussie. So this is the year-on-year figure. It's not as important as monthly and quarterly because it is a long-term annualized number. We kind of know most of the time what it's going to be within 0.1%. So we very rarely get a fluctuation more than 0.1%. So it doesn't tend to do an awful lot, but it can move the market. So that one's one we want to watch this week, the CPI, the inflation figure. Forecast to go up. If it doesn't, if it's come down, that will drop the Australian dollar. If it comes out at 3.6, it will pump the Australian dollar. If it comes out at 3.5, it might well do one or the other, but obviously there's no fundamental bias. We got Waller speaking on Wednesday evening, late at the swap. Might say something, might not. Unlikely because we had Powell talking twice last week, obviously with FOMC. Not a lot I would expect to see out of that. We got Aussie retail on Thursday and GDP for the CAD. So I'm streaming at 12:15 on Thursday. We'll be on for the GDP figures and for the Canadian dollar and the unemployment and GDP for the US. So this one here and this here is your biggest movers this week. And then in the afternoon, we've got pending home sales and the revised University of Michigan numbers, which won't really do a lot. So it's a bank holiday in Australia and New Zealand. Friday, as with everybody else. So no stream on Friday. We have got the PCE being released on Friday because it is not a US bank holiday, but we'll see what happens. So that's basically it. That's your news this week. And then into next week, obviously, daylight savings shifts again. So good brokers swapping times again, really annoying. But anyway, be aware that's happening on the weekend. And then Monday is also a bank holiday, so there's no stream on Monday. So that's this week. Not an awful lot. It's a bit of a wishy-washy week, really. 2 main news events, and that's it. So there we go. That is your news overview for the week. Morning, Amy. Would you remove the TP off all yen crosses? Yeah. So any yens you're short on, if an intervention move happens, yeah. So if you look back at the previous intervention moves on the yen, so the intervention. Let's look at the big one, which was there. Yeah. So that was the big one. If you go and look at any other yen pair on the 21st of October 2022. I'll just move it out of the way, yeah. Big move there. Not as big. So that one there was 350. ADR is 80 on this, so it's still massive. Aussie dollar yen, yeah, much smaller move there because the Aussies are asleep. But and the same with the New Zealand dollar yen. The pound yen, big move against, but it's not going to be anywhere near as big. But the upshot of it will be the same. Once the intervention move is in, the market will shift back to a buying stance on the yen, and the yen will will power up rather. Yeah, so you will get a move continuing on all of them. So if you look at all of them and what happened after the intervention move, it came down. Everything comes down. Yeah. So the reason the US dollar yen is the big one is because the vast majority of Japanese overseas investment holdings is in US dollar. So when they liquidate anything, they are liquidating the US dollar. So they are selling the US dollar to buy the Japanese yen. So the strength of movement on this currency pair is twice as big because not only are you getting the yen powering up, driving everything down against the yen, you are also getting the US dollar weakening because the Japanese are selling a massive amount of US dollar at the same time as they're buying a massive amount of Japanese yen. Yeah. So that's why the intervention move is always larger on the US yen than it is anything else. But that stance is going to change because we are now using interest rates in Japan to control inflation, which hasn't happened for decades. So the shift in monetary policy from a negative interest rate that happened there, where the market went completely the wrong direction, is now different. So we are now using interest rates to control it. But the interest rate differential between the yen and the US dollar and all other currency pairs, if you look at the differentials on interest rates, it's absolutely massive. So Aussie dollar yen, the differential is 4.35. Swiss yen, 1.5. It's not a lot. Euro yen, 4.5. The US dollar yen, which is the big one, is 5.5. So the difference between interest rates, i.e. what you would earn holding your money in that currency, is absolutely massive. So it's still tiny, really, 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 really small, the interest rate for the Japanese. But as they said in the news, somewhere in there, they would like to speed up the rate of interest, the interest rate change. It's in there somewhere. But basically they said, we want to start to get a little bit more in line with the rest of the world, i.e. we want our interest rates up at sort of 1.5%, 2%, 3%, where everybody else sticks them, basically. So that, I suspect, will increase. So that when the US dollar, what's going to happen with interest rates where with all other currencies, as you can see, the Swiss started it off last week, as we know. But all other currencies are going to start to drop their interest rates now. Yeah. As we are getting inflation under control, we're going to start to drop interest rates. The Japanese are going to increase interest rates. So the differential, the difference between the two, which is what we call the differential, is going to reduce quicker because all others are coming down while Japanese are going up. So the speed that they're going to, think about two cars. You've got a stationary car and someone moving at 70 miles an hour, the speed is 70 miles an hour. You've got a car moving at 70 miles an hour and a car moving at 70 miles an hour, it's 140 miles an hour. Yeah. So the difference between the two is going to accelerate, which should again power up that Japanese yen moving forward. So yeah. For CPs, it depends how long you want to hold it, obviously. So I will get out when I'm comfortable getting out. We got this massive propulsion gap, which you might find people still willing, banks and institutions still willing to buy at. But I'd be looking at least down there if it happens. There is an argument. There's people out there saying at the moment now, because they've changed the way that the monetary policy stance is on the Japanese yen, there's no reason for it to power up. Yeah. So what's happened is they've increased their interest rates. Brilliant. They're not using overseas investment now to control inflation and control monetary policy. They're using interest rates the same as everybody else. But the interest rates are tiny. Therefore, we don't really want to be buying the yen. So the banks and institutions may do that. What the question is what will the Japanese do if they do? And what we've heard over the weekend is, in no uncertain terms, shoot everybody. Yeah, they will just pump the yen. It's the old pump and dump. The Japanese and the Swiss are kind of the only two that can do it because they don't hold a lot of their own currency. They hold overseas investment rather than their own currency because their interest rates have been negative. There's no point in holding money in a negative interest rate because you put $1,000 in, you're going to get less than $1,000 out because the interest is taking money away from your account rather than giving you money. That's the whole point of it. So now we've got back to zero. You can hold yen and you won't make anything, but you won't lose anything. It's a very safe place to put it, same as the Swiss franc. That's why we call them safe havens. But anyway, that's what should happen. Whether it will, we'll have to wait and see. Morning, David. Were you able to carry out the 60-day ADR test? Yeah, some of it. I've got to analyze all the data. But yeah, I think it's in this. It's in here. Yeah, there you go. So I've done an analysis of all of loads of stuff, basically. So I've got all the data. I just need to crunch the numbers. Oh, hello. That's big. So yeah, so I've got all the data out. I just need to do tests on the data to see what it is, what it's like. But that's next step, which is on my list to do today. But I haven't got any conclusions yet. But I mean, we can quickly look at some. So this is. Oh, what's that down there? So maximum draw. Oh no, min one, not max. So maximum drawdown using ADR 60 on the Aussie dollar CAD over a 5-year test was $2,226. Using our good old ADR 10, the maximum drawdown is. Do not copy that. Copy. Paste. 1,166. Not a lot of difference, is there, on that one? So that test, inconclusive. This is basically what I'm going to be doing, is just analyzing what the effect of ADR is on drawdown. 3,400 on ADR 10 on the Aussie Swiss and ADR 60 on the Aussie Swiss is 2,100, 3,400. So that's lower. So what I'm expecting to find is basically the drawdown will be lower with a higher ADR. That's what I'm expecting the results to be, because the lot sizes taken will be smaller overall. Therefore, any drawdown that you go through, any squeezes that you go through, will start with a lower lot size, which means you'll have a lower drawdown. The profit shouldn't be affected too much, because although you're using a lower lot size to start with, your profit target is not changing. But the amount of drawdown, the variable, is changing with lot size. So most people in here probably haven't got a clue what we're talking about, but I will put a video out on it when I've done all the research. Morning ago, sir. Right. So let's have a look at what's going on at the moment with the market. So there's nothing to look at on ADRs today. Nothing's hit its average daily range on the 10 ADR. Maybe it has on the 60. Let's look, shall we? Let's see if there's an ADR 60 hit. Probably not. No. I didn't think there would be. Market's not really moved. It's Monday. But yeah, there's no ADRs today. So nothing to look at on ADR. Weekly range, obviously, it's Monday. Nothing said it's weeklies. We've got one monthly hit. Only one monthly hit. So this gives you an idea of how crap March has been, apart from one particular protagonist called the Swiss franc. We've got one monthly hit on the Euro Swiss. That's it. So this is the kind of the last week of the month, really. It is actually, yeah, because Monday is the 1st of April. So this is the last week of the month. Also, the last week of the quarter. So, right, okay, so yeah. Last week of the quarter, we quite often get very, very big moves in the market. And the fact that we've got no news this week doesn't mean we're not going to get no movement. So bear in mind, banks and institutions, corporations report profit figures on monthly and quarterly bases. This is the end of quarter, January, February, March. It's also end of year. Okay, a lot of companies report from March to March. April start is a new year. Same as way we work with HMRC and tax in the UK as well. So this potentially is a big week. Let me just check when the next triple witching is. You're not going to give me the dates, are you? Oh, yeah, here we go. March 15th, we've already had it. So there isn't one this week. So basically, the end of month, end of quarter, potentially big moves this week. So we might see some of those monthly levels getting hit, but Euro Swiss is the only thing that's hit its monthly range. So the average monthly range for the Euro Swiss is 225. Yeah, so that is what it's done over the last year on average. It does about 225. So if you look at this monthly low down here, you can see that we are way over that. No, that's not the monthly low. Hang on. Where are we starting from? Back here. March. Where's March start? Just because I'm looking at a 4-hour chart. There we go. There. 225. So we've done 229, 230-ish. Yeah. And it's come back off the top there. So Euro Swiss, obviously, the move, the average monthly range mean reversion that you would have played would have been when we hit that average monthly range and you're looking for it to pull back from that level. That was the new spike in this case. So, most people will be forgiven not for taking that trade because obviously we had no idea what was going to happen with the Swiss franc. Good area to buy from here. Obviously, we expect them to buy against the Swissy from now on. So yeah, Euro Swiss is the only monthly range hit we've had. RSIs at the moment, the only thing that is still extended on the RSI is the Aussie New Zealand. I'm in the Aussie New Zealand short. I've got a little bit overexposure on this because I've got too many positions on it. So I need to put my stops back in place. That reminds me, because I removed them over the weekend, so I didn't get stopped out on the swaps. So I'm going to be scaling out of this and taking a loss on some of this Aussie New Zealand if it pushes today and it continues this week, because this thing is not pulling back at all at the moment. Really weak New Zealand dollar, and off the back of this interest rate where we stayed the same, and Aussie's had some decent moves, positive. So this has kind of become the perfect storm, and it's just grinding away. So I need a decent move on this to actually get out of it. So I'm not going to get out of it this week, I don't think. I'm also not going to take an aggressive drawdown control on it either, but hoping for a pullback, basically, just so I can get out of it, because it isn't working, and I've been in it for a long time. So that's your only extension. As you can see, it's extended and embedded. Since it got extended, basically, it's just kind of popped off the 50 and sat around up here. We got a massive extension last week up to the 90 level, which we just do not get to. That level is very, very rare for anything to hit 90. Yeah, that was 89 in this case, but it's just not a level we get to. The 90-10s on, it's incredibly rare you get anywhere near it. And normally what you do get is that pullback, because the market is just so exhausted after that sort of movement. You can see what it's done. Yeah. Akin to that. Yeah. What normally happens is that. Yeah, it's exhausted. It's shot. So the reason I'm not doing aggressive drawdown control on it is because I've got quite a lot of size on it already, and it's so extended. I'm anticipating the bank's just unraveling some of this position as well. Anyway, so we've just taken out last week's high. We're just closing back down below it. If they do continue to grind it this week, I'm going to have to scale out some, take a loss. But that is your only RSI extension we've got at the moment. We've got 4-hour. There's no hourly RSI extensions at all. We're flat. So, yeah, nothing to look at there. Just seeing how my pound trades from Friday are getting on. Move the TP up on that a little bit. There. So we'll whiz through all the pairs this morning and have a look at everything and see if there's anything exciting happening, basically. With lower ADR, wouldn't you also be getting into more trades in a squeeze just because ADR isn't as reflective of recent movement? Yeah. Potentially, yeah. And that's what I'm doing the research for, is to find out what the differential is between the different ADR numbers. So the research is basically to find out what the difference is, what the pluses and the minuses are. There's always positives and always negatives. So where's that research I did? ADR analysis. It's that one, isn't it? Yeah. So this is an ADR analysis of the euro pound using ADR 5, 10, 20, and 60. And this is the chart basically for that, going back 4 years. So you can see basically this blue line is ADR 60. Yeah, which is the 3 month. It's the quarterly ADR and how smooth it is. Yeah. So the number is lower, which means that your initial lot size will be different because the risk will be over a different distance. But it will be more consistent. Yeah. So it will be probably higher risk initially, but more consistent. With the other ADRs, you can see that there's a variance and a deviation at times as the market gets volatile. You get these spikes and deviations away from that ADR 60 line. So it's just like moving averages, basically, at the end of the day, isn't it? It's just the average daily range. It's a moving average. That's what they are. So that's basically where you're going to get those differences. So at these times, you want to be getting in with a lower lot size because the market is more volatile. What I'm interested in is how long does the market stay more volatile for? Because what you will find is it's difficult to get out of trades. If you get in, if the ADRs are very big, you're going to be spacing your trades a very big distance apart. Now, when the market then calms down and the ADR drops and price movement drops, you can't get back to your average price sometimes because it just doesn't pull back far enough. It pulls back on that big volatile move it's done, but it doesn't get back to where you want it to be because you've been spacing your trades out too far. So there's a fine line between getting in with too much risk by using a longer ADR and getting in too far apart because you're using too short an ADR. So what I'm looking for is what's the Goldilocks zone? Yeah. So I'm looking at the ADR 5, 10, 20, 40, and 60, which is basically weekly, fortnightly, monthly, 2 monthly, and quarterly. Yeah. And just want to run tests to see what the impact is on the three things that are important: a drawdown. Yeah. These are the three things in position trading, which are the key things that are going to hurt or harm or make your day, basically. Drawdown, your initial lot size, and if you're using a lot multiplier, that obviously is important because the higher the initial lot size and a multiplier, the bigger that overall position is going to become and faster. And the distance between trades. So those are the three things that kill position traders when they get it wrong. You either do not control your drawdown, or your drawdown gets too big. You get in with too much size, or you get in too close together. Those are the things that harm you as a position trader. If you space your trades 1.5 ADR apart with a small lot size without using a multiplier, if the market pushes against you 20 ADR, it's not going to do a lot. It's going to be uncomfortable for a very long period of time, and you might get killed by swaps. But if you get in with a very high lot size and you multiply it by 1.2, 1.3, and those positions are only half an ADR apart, and they're a small distance apart, and the market pushes hard, you're going to get hurt very, very quickly. Your drawdown is going to get huge. But you will need a much smaller pullback to be able to exit those positions. So what I need to do is run the tests, find out what I'm interested in is lot size, drawdown, number of trades, and I was going to write an analogy, a shortening basically for time in trade. So I'm going to write it because you know what it would have been if I'd have shortened it. So time in trade. So how does it affect how long we're in trades for. If it shortens dramatically the time you're in a trade using a different ADR, a higher ADR, that's a good thing because it frees up liquidity to get into other positions. Also means you get out with a profit, which is what we're after at the end of the day. The number of trades has an effect on drawdown. So I'm interested in how that, how many trades we get into. So if you run with an ADR 10 and you get into 10 trades, if you run the same thing with an ADR 60 and you get out within 5 trades, it's a good thing. Overall drawdown. If the overall drawdown is lower with a higher ADR number than it is with a low ADR number, that's a good thing. So it's all about just looking at the data and going, well, time in trade is slightly shorter on 80% of pairs. Number of trades is slightly smaller on 60%. The drawdown is lower on half the trades, and the lot size is lower on everything. That's a plus, a plus, a plus, and a plus as far as I'm concerned. And if it's the ADR 60 which causes all of those things to happen, I'll switch because it's better, isn't it? So, it's just an analysis that I'm running basically to find out if there is a better way. There's always a better way. And one thing you learn being in this industry for such a long time is you never stop learning. There's always something. There are so many moving parts in trading and there's so many ways to achieve the same result. There is always a better way. It's like programming. You get 10 programmers in a row and you say, I want you all to code me this. You will get back this, but you'll get it back built in 10 different ways because no two coders are going to do exactly the same thing in exactly the same way. Same with trading. There's a billion ways to make money in this market. They're all good. They're all bad. It's the bits which are slightly better that make you slightly more profitable and smooth out the equity curve. You can make yourself hideously more profitable with much more risk, or you can make yourself a little bit more profitable with very low risk. And there's everything in between. It's a spectrum, isn't it? So that's what the analysis is doing. And I might come out of it at the end and go ADR 10, which is my initial findings from 4 years ago. ADR 10 is the one. But I've never tested the ADR 40, which is the 2-month ADR. And there is an argument because if you look at these volatility spikes, and this is something that's becoming clear when I'm looking at all the data I've got so far, which I haven't spent a lot of time on over the weekend, but I did an hour or so of it. What I'm finding is these spikes here don't last very long. So what happens is in a market is you get an accumulation or a range where the market is in balance. It's happy to trade. We know that. 80% of the time, the market is range bound. 20% of the time, it's trending, which is what we call price discovery. That is typically a high period of volatility in the market. Your average daily ranges increase as the market dumps and drives to a new price point where it then finds equilibrium and goes into balance again. And then it will go into a high volatility period where it will move. And these are normally caused by news events, fundamentals. Yeah. So the fundamentals shift, meaning there is now a reason we shouldn't be trading here. We should be trading at a new level. So let's try and find out where that new level should be. Okay, here it is. We'll stay here for a bit until the next inflation figure, the next interest rate change, the next unemployment number, the next whatever drives it back the other way. So if you measure over a 2-month period, ADR 40, you're getting CPI, unemployment, and interest rates twice with vast majority of currencies, aren't you? So what we're doing is we're measuring what impact fundamental news is happening over a 2-month period on average. How does it spike the market and smooth the market? If the market stays smooth 80% of the time and spikes 20% of the time, shouldn't we be using that number? Because we want to use what it does the majority of the time. But we also don't want to use something that's too small because, well, some just going to be going like that all the time, which isn't good. And this is where I'm thinking possibly ADR 10, after what I'm seeing, is slightly too aggressive. However, I've been profitably trading with ADR 10 for 5 years. So it's a hell of a drag for me to move away from what I know because this is what I've been doing for decades. Not decades, for years. So, but there is arguments for these as well. So But I'll publish all the research when I've done it, because it's important, obviously. If I switch, you need to know why I'm switching. Like when I switch from time frame or switch from an RSI to a different RSI, you know, there's got to be a reason that you drag yourself away from what's always worked. Euro yen, we can have a look at that. Well, if you were here earlier, Rudra, you know what to do. Sell it. Don't buy it. Timing trade reminds me of Del Boy from Only Fools and Horses, abbreviating Trotter's Independent Traders. It's also Mark Douglas's very famous book, Trading in the Zone. Trading in the Zone. Very famous book. Read it. If you haven't read that book, tits, read it. It's brilliant. One of the best books on psychology in trading you will ever find. Anyway, we were going to do some analysis, weren't we? I've been talking too long now. So we'll go from the top to the bottom and just look at everything and where everything is, basically. So my exposure at the moment is I've got Euro yen and US yen shorts. I've got US dollar Swiss short, Aussie New Zealand short, and I've got a couple of pound longs on at the moment. So that's all I've got on at the minute. Up 17% on this account for the month. So I'm just trying to control this Aussie New Zealand at the moment. It's the only thing that's in a bit of is in pain, but I will be doing something about it and taking a loss on it. So looking at the Aussies, at the moment we are not really doing an awful lot on the Aussie against most other currencies. It's obviously flying against the New Zealand dollar because the fundamentals at the moment are, for some reason, the market doesn't like the New Zealand dollar and it's loving the Aussie, but no real reason for that. So this is a prime example of what I've just been talking about with ADR, yeah? Balance, price discovery, balance, price discovery, balance, price discovery. Volatility based on news. Yeah, but look at what the market spends 80% of its time doing. Balance, sideways, equilibrium. We're happy to trade here. We're not happy to trade here now because of something. Okay, we're happy to trade here now. Yeah, it's negotiation. Banks are just negotiating with each other over what we should be doing with our exchange rates. Yeah, so these periods here are massively affecting ADR 10. They won't affect ADR 40. It will go up, but it won't go up by 10 to 20%. It will go up by 1 or 2%. Yeah. So going sideways at the moment in a big range. So we had this high, we broke, we support, we buy. Yeah, we're coming back down towards that at the moment. So we're currently in a very odd multi-level range, bang in the middle of it at the moment. You can see I've only had one trade on this, which was back here this month. I decided to get out of it. I think that was probably on a news event. Yeah, I think it was a news event that spiked me out. So no real entries on this one from an RSI perspective. So at the moment, we are kind of bang in the middle of this weekly range from last week. So this is last week's low, last week's high. We're sitting bang in the middle of it with a propulsion gap above us and a propulsion gap below us. So this, if it pushes up today or this week and hits ADR, will probably push back down again. And that's where I suspect we will be headed. But we've obviously got this weekly level that they bought twice last week, which is 125 ADR. Friday's low as well. So there's a potential for it to drop down there. But at the moment, we're bang in the middle of kind of this range. So there's not really any directional bias. And there's no reason to be taking trades. If you're going to take a trade, you want to be taking it at an extreme after either the market is stretched or when the market has a level where it's previously bought or sold from. So right now, we're sitting bang in the middle of it. Good opportunity to sell if we hit ADR today, because this big news event that we had drove the market down. They've resold it. We've come back up into that propulsion gap and resold again. Yeah. So we had a propulsion gap followed by an accumulation followed by a propulsion gap. That is where they've added in. If it pushes up into here, they'll probably add back in again there. So you got a short-term move you could play on there. But long-term, we've put in market structure of a high, a low, a lower high, higher low, which is a symmetrical triangle, which is a contraction in price. Probably going to go down. But we'll wait and see what happens. Again, very little news this week. The only news we have got this week is the Aussie. We've got CAD GDP as well, but the Aussie's GDP is nowhere near as important as CPI or inflation or interest rates. So CPI is kind of the big one this week. So potentially drop on the Aussie. Aussie dollar Swiss, we know about the Swiss franc. This crazy loony move we had on the Swissy, completely undone it on the Aussie Swiss. Again, you can see how the market is moving at the moment. This is just what we're doing. We're just sitting around in balance, grinding up, sitting around. Yeah, move, price discovery, balance, price discovery. We're pulling back into this high again here, which we may well buy from. Now, the Swiss franc, obviously, with their interest rate drop, being the first people to drop interest rates after the interest rate rallies we've had, potentially this will weaken the Swiss franc long term. However, the Swiss franc being a safe haven currency is affected by international events. And if anything happens anywhere in the world which is bad, they will buy the Swiss franc. They will put their money there because it's safe. So it's a very difficult pair to trade, as most people know. It's very irrational, very erratic. So at the moment, we're kind of stuck in the middle of nowhere. Last trade was there. It was a nice quick short. Had one there as well, which was a nice quick short. You see what I mean when we were talking last week about should you remove the Swiss franc from your portfolio? Should you remove the yen from your portfolio? My portfolio tells me that I make a load of money out of the Swiss franc. My historical trading information says you milk the Swiss. Why would you stop? Right now, it does irrational moves. We know it does irrational moves. It did one last week, which hurt a lot. But every now and again, things go wrong, and then they go back to being right again. So you don't just get rid of something because it's gone wrong for a couple of days. So at the minute, I'm still getting into Swiss francs. I'm getting into Swiss franc when it is massively extended, though. Yeah. So 80-20 extensions only on the Swissy and the yen for me at the minute. And yeah, pullbacks. But this area here is the potential area you're going to find sellers, but bias is obviously long. Yeah. So I'd be more interested in buying against the Swiss franc at the moment than selling against it. But then the market uses the Swiss franc as a safe haven place to put money. So if that Japanese yen intervention comes, the market will get scared. It will remove money from other currencies which are unsafe, and it will put it somewhere safe. This. So it's difficult, very, very difficult to trade the Swiss at the minute. But from a fundamental point of view, probably everything against the Swissy. So if we get down into these lows, which is a lovely triple top sell that the bank's made, yeah, I would be interested in buying it. So an ADR hit to the downside to long, or an RSI hit to the downside to long. It's probably the best thing to do in that one. Aussie dollar yen, as we know, with all the yens, there's a yen sell, lovely, straight out. All yens, I wouldn't be interested in buying at the moment until the market proves me wrong. I'm just going to be looking for sell opportunities on the yens. So ADR hits to the upside, RSI extensions to the upside, shorts. Same with all yens. Aussie New Zealand, already in it. It's coming down fairly nicely this morning at the moment. Well, it's trying to anyway. It's trying to get back to the open basically. But yeah, just looking for some weakness on this leg. So we haven't had a profit take move. So this was the New Zealand dollar interest rate decision, which was flat. Rudra, you did this last week, didn't you? You asked about the same pair over and over again. I answer the question and you keep asking the same question. I'm not quite sure if there's a language barrier, but you're asking about euro yen again. What have I said all morning? For probably half of the stream this morning, what have I been talking about? The yen. What should you do with everything against the yen as far as I'm concerned? What do you think you should be doing with the euro yen? Buying it or selling it? Not quite sure what's not sinking in. There's a clue. Yeah, sorry. Huge move, no profit take whatsoever yet. So we're looking for the banks to unwind a portion of this move. So this move is this interest rate change that we had on the New Zealand dollar, which was no change. Basically, it was flat. We did not change interest rates. There was absolutely no reason for the New Zealand dollar to weaken to this level off the back of that. We're not expecting them to drop their interest rates. We are expecting them, if anything, possibly to increase them because they're a little bit further behind. Unlikely, but we're certainly not expecting them to drop interest rates. So there's no reason for this weakness. And that was back at the beginning of February. Yeah. So actually, sorry, beginning of March. So looking for a pullback on this leg. This propulsion gap is the last accumulation break that we had. We had another kind of weird, uneven accumulation there that we broke out of. So these two propulsion gaps to the downside of the targets. I think there's a good chance that we will stay in a range on this because there's no fundamental bias between these two to be positive or negative. So over the next X number of days and weeks, we'll quite possibly find ourselves all the way back down here. However, that is my interim target. If we get down into that propulsion gap, I will probably close the lot. If it gets down to here and we've got some news event on the Aussie New Zealand, I might stick some break evens on or something and just try and get a push down to there. But long term, no reason why that one shouldn't be coming down at some point. It is absolutely stretched. And this is the 4-hour RSI extension we looked at. You know, you don't get to this level very often. Very rare for us to get up to the 90s. Huge extension. Yeah. That's what comes afterwards. A profit take move. Huge extension, profit take. Huge extension, profit take. Huge extension, profit take. Yeah, it's what the market does. It's all the market does. It goes up and down. They drive, they build a book, they make themselves massively P&L positive, and they go, right, let's take it. And they undo the move. That's what it does. So that's what we're looking for. Yeah, timing is the one thing we cannot do. We cannot time when these moves are going to come. Sometimes they're that big. Sometimes they're that big. Yeah, we don't know how big the move is going to be. We know it's coming. It's due. So we've got a resistance coming up, which is 225 ADR. We've got this area here. Which is somewhere around 150 to 225 ADR, which we've sold from over and over and over and over again. It's an area the market isn't really interested in trading above, which is kind of 109 area. So if we push up a little bit further today beyond ADR, I will be getting out of some of this because I don't want to hold the heat all the way up to there if we're going to get there. I'd rather put the positions back on again once we've got there and take some of this risk off. Reducing the lot size. I've got too much lot size on this one at the minute. So I'll be waiting for them to push up to that level. If they do. If they don't, obviously they're just going to start the move from here. So again, same as usual, stick a fib on it and just measure the move and go, right, if it's going to be a nice shallow pullback, we'll be looking for a 38 retracement. If it's going to be a nice deep medium pullback, you're looking for a 50% retracement, propulsion gap, propulsion gap. If you're looking for a deep pullback, it's going to be somewhere around about that 61.8, 71.9 level. That is assuming it's going to continue on its merry way. If it does a complete A-shaped recovery, we're back here anyway, aren't we? So if it's going to be a flag, that's what I would class as kind of a 23 retracement, which is your flag break move. That's only where it's going to get to. So you need to be watching this propulsion move here for a potential bounce. Other than that, should be coming down. So Aussie New Zealand already short. Aussie US is just volatile. It's news, nothing. News. It's all news. If it's not news, it's snooze. Basically, it's dead. So sideways, completely range bound at the moment on the hourly chart. Yeah, we're just news events, milking the news. News event, milk the news. News event, milk the news. News event, milk the news. It's basically all the trades I've been doing is just milking the news, basically. So if it pushes hard in one direction, I'll be getting out. I'll be getting in. You can see the trades that I've had on this. It's the same thing, rinse and repeat. RSI extension, enter, out. RSI extension, enter, out. RSI extension, enter, out. We're not there yet, so just waiting for the news. We got an A-shaped recovery on that leg off the last news event. Straight up into the propulsion gaps, resold. We got propulsion gaps up there. See what happens this week. It's end of quarter, so we may well get some big ADR days and find ourselves up here very, very quickly. If that's the case, obviously, I'll be shorting it. But right now, it's just kind of in an uneven range. So we had these highs put in, then we put in a low. We've kind of hovered around inside of it, pushed up ever so slightly out of it, came back down, didn't quite get to that low. We pushed up. So we're going into kind of a symmetrical triangle pattern here at the moment. We're contracting in price. If it continues to do that, look for an explosive move at some point on some news event in the future. But right now, it's nothing to do with it. CAD Swiss, pulling back. So the Swiss franc, obviously, last week stuffed us, changed their interest rates, completely unexpected, completely unannounced. And we seem to be on most pairs pulling back. And if we haven't undone it, we are very close to undoing it. But with that news event, with them dropping interest rates faster than expected, the banks are probably going to not be as interested in buying the Swiss franc at the moment, because the first drop is usually the start of a cascade effect. Yeah. They were at previously negative 0.75 interest rates. We went up to 1.75. Now we've dropped down to 1.5. They're probably going to continue to drop. So if they're going to continue to drop interest rates and nobody else is going to move until June, we've potentially got 1, maybe 2 interest rate changes on the Swiss franc before the US dollar moves. So it should, in theory, be weak, which means you want to be buying everything against the Swiss. So pullbacks into propulsion to buy. So the propulsion move is the bank buying. If the bank wants to stay in that direction, it will add to the position in the propulsion gap and push the price further out. If we pull back down into this area, which is where we broke before the news, that again is an area I'd probably look to buy. But right now we're stuck in the middle of nowhere. All the ends, same as everything else. Shorts. There's the CAD yen that I got out of last week. Got out of it way too early. I wanted to just reduce my yen exposure because we didn't know what was going on with it. Now we know the Japanese are threatening intervention again. I wouldn't have any problem getting back in. So if we push up, I mean, it's unlikely we're going to push up. But if we push up into that, into ADR, into that propulsion, we're not going to get an RSI extension. But if we get up into that area, I'll be happy to short. I have got full exposure on the yen at the moment, though, already. I'm double exposed long on US dollar yen and euro yen. So I'm not going to get any more on, but that is where I would do it, up in that area of propulsion. Swiss yen, again, obviously the Swiss franc move, because the yen is powering up potentially and the Swiss is dropping. There's not really any reason for them to undo this move. There's not enough power in the Swiss franc to rally it. The yen is obviously rallying, so it will be driving the Swiss down. So again, market structure on this is properly shifted to the downside now. So we've got our high that we hit there. We had a news event, propulsion move. They pushed back, added in, pushed down, pushed back up, added in, same level, but that was the Swiss franc. Just happened to coincide with the news event. But high, low, lower high, be expecting to break that level and put a lower low in, and then start market structure south. So be looking for short opportunities, RSI extensions to the upside, ADR hits to the upside, looking for opportunities to short it. Euros, nothing is happening with the euro interest rates until June. We know that. Lagarde has come out and said that. Everybody has said the same thing. We're all going to do the same thing in June. When the US move, we're going to move. So we're all waiting to see what happens. But Lagarde came out and the ECB have come out over the last few weeks and indicated nothing but a potential June interest rate move. So they have the opportunity, however, to go a little bit sooner because their interest rate, their inflation is at 2.6 and it's still dropping. So when you get to that 2%, 2% is the target for inflation. Everybody's inflation target is always 2%. In 2% inflation keeps your economy healthy, keeps your GDP going in the right direction, makes mortgages affordable, keeps the housing market moving, keeps taxation low, keeps unemployment low. It's just we want to be constantly just making money, not aggressively, not losing it, but constantly getting stronger. That's what inflation is. So 2% is the target. We're at 2.6. Our interest rates are not as high as other countries like the pound, New Zealand, US, etc. So there is an argument for them dropping interest rates ever so slightly before the US, but it's going to take a big unexpected inflation drop. So the next CPI figures we get for the Eurozone, if they come out lower than expected, that will put a lot of pressure on the ECB to drop this quicker. They don't want to drop it too fast, but they will. So the long-term quarterly outlook on everything, basically, not just the euro, but on the euro is a little bit stronger sell than most. So Aussie shouldn't be doing anything. And, this is why we're sitting in these ranges at the moment. There is no fundamental reason to buy or sell either of those. We're just waiting for everybody to drop their interest rates. So until that happens, we're just going to sit there and go, we're waiting most of the time. News events will shift the market, obviously, as they always do. But I'd be much more interested in shorts than longs. So that was the last trade that I had there, out way too soon. I did take a long there, which was an RSI extension to the downside, but that's because there's no reason for it to do anything than that at the moment. So, but I'd rather be getting into those than those at the minute. So where we are at the moment is we are contracting. So we just have to wait and see where it goes this week. If it pushes up into the highs, be looking for sales up there. If it breaks down, there's a good chance we're going to put a new lower low in and market structure will shift to the downside. So waiting for that ideally, or an ADR hit to the upside. Big ADR hit, 150 ADR or something like that. I'd short that. But as you can see, the propulsion move held. They added that propulsion move. They added. So we're stuck between two big orders. The bank's buying this level. They're selling this level with aggression. One of those is going to break. Whichever one breaks, we're then coming off to test the lows or the highs. So we're either going to go there or initially there and there. We're right in the middle of the two. You can flip a coin. One of them is going to work. Find out this week. EuroCAD, sideways mess. We're coming down into the range lows at the moment from the 3 weeks ago. This is last week's low. That's the 3 week low. That's the low prior to that, which is the previous high. Yeah, it's just support resistance. So we've got this propulsion gap to the downside as a target, and we're selling this level. So we've sold it again this morning. Look. Yeah. So big propulsion move off the news, came into it, sold it, came into it, sold it. Looks like a sell, doesn't it? So we've got this area up here. So if you're getting short at the moment and it doesn't work out, you can add one there. And then you've got another resistance at 175 ADR. So that would be my position trade plan if I was going to short this now. Average would be there. If we push up into there, be looking for a pullback. But much rather be short than long. Euro Swiss, very difficult. The euro moves with the Swiss franc. As you can see, the market has been selling the Swiss franc for weeks because they were expecting potentially a drop in interest rates to happen, and it did. But they weren't really expecting it. They were anticipating if anybody's going to do it, it's going to be the Swiss. So what I suspect is we will continue to do that move. However, it's very hard when you've got a move of this size to long it, because we know that the market will want to unwind some of this position. But at the moment, the fundamentals on this are a potential short against a short, which gives us a sideways movement. So it's difficult to call the Euro Swiss. I kind of want to be buying it out of here, but I'd also want to be selling it because it's the euro. So very difficult call. If we get any signals on it, I'll take them. But at the moment, as you can see, that was the last entry that I had there. Off that, you can't see the RSI is behind my head, but the RSI was extended there. Since then, I haven't had a trade on it, on H1. ADR, it's had entries. The ADR account got massively hurt because of that push and that squeeze. But yeah, so much rather be kind of shorting it, but also longing it. So this is a very low ADR pair. ADR is only 46 on this. So of all the pairs out there to trade, the Euro Swiss is probably the least favorite because it's not moving very much. And when you get a positive news event on the Euro, the Swiss franc moves with it. So what you tend to get is if there's a positive news event, you don't get any movement because they both push at the same time. They both pull at the same time. Excuse me. So can't really see anything interesting at all on that. Euro pound, again, I was stuck in the Euro pound since January the 3rd. I put a post in Discord about this one last week. That was my initial trade at the beginning of this year. I took an additional entry. And then basically we just pushed down and I took an additional entry. So I was in 4, no problem, just waiting for pullback into propulsion. Yeah. The pullback into propulsion took 6 weeks because we just went sideways for 6 weeks. I'm not interested. ADR on this is 28. It moves 28 pips a day. I can't, just not interested. So as you can see, I milked this over the last month. I had loads of trades I took where I longed it and I got out and I longed it again and I got out and I just kept longing it and putting money in the bank. But overall, most of that was just paying for the hold of this, a swap hold for 3 months. So overall, it was a profitable trade, but not enough. So we are back up in propulsion and we sold it. So are we going to continue this nonsense for another few months or not? Just not interested. So if we get a signal on it, I will get in, but I don't think there's much chance of getting a signal on it, to be honest. So any ADR, and this is where ADR becomes, this research that I'm doing on ADR, further research I should say, becomes interesting because the ADR, if I draw the ADR 10 on the chart here, so it's that line there and this line here. Yeah. If I switch ADR to ADR 60, which is the 3-month ADR, look at the difference in the lines. Yeah. So I don't know if you can see it. It's a bit difficult to see, isn't it? So this one here and this one here is ADR 10. That is ADR 60. There's no difference. There is absolutely no difference. We've had a little bit of volatility into the market, but anything that stays range bound, which is what the market does 80% of the time, ADR 10 and ADR 60 don't affect it. So the 2-week ADR and the 3-month ADR, because the 3-month ADR is so smoothed out, they're very, very little difference when something is just doing sideways movement, which is what we get most of the time. So with this one, if you get an ADR hit to the upside, it's a really good trade to take because we know there's a good chance that if it's moved above ADR, it's not going to get much further because it just isn't doing it. There's no strength in the euro. There's no strength in the pound. It's just a case of if it gets up there, short it. You might have to wait 3, 4, 5 days for it to get down there. But yeah, it's just not going anywhere. So I'm not really interested in trading it too much. It's going to need to get a very big ADR extension or a big RSI extension for me to get interested in it. It's just not worth it. There's much better pairs out there to trade. Euro yen, same as everything else. There you go, Rudra. Sell it. Sell it. Euro New Zealand. We've had a decent move on the Euro New Zealand. Again, this New Zealand dollar massively weak. The interest rate change, or rather the interest rate non-change. Unbelievable weak reaction to it. So big, strong push up, retest, market added, and we've been off ever since. So lovely opportunity for a pullback on this. I haven't had an entry short on it. I had a long from here when I got out those shorts. So that was the short, that was the long. Didn't quite get in that one there. Didn't happen at the right time because ADR was extended and I was in a long already. But there's no opportunities to get it. But I'd be much more interested in shorting it at the minute, just because I think this New Zealand dollar's got to power up at some point. There's no reason for this massive weakness to have come in. They didn't change their interest rates. They're not planning to. So it's not weak. It's just having a bad run against it at the moment. Probably a commodity thing because it's a commodity pair. But propulsion gaps to the downside could well hold up. So we've got quite a few targets to the downside and obviously the interest rates. So anywhere down there, potentially you could long it. Anywhere down there, potentially would be a good long. However, if it does continue to push up and we do get an RSI extension or an ADR hit to the upside, I'll be happy to short it because it's going to come back down to here or here or here at some point. So I'd much rather this actually drove for a day and then I can short it back down into those levels. And Euro US dollar, very orderly at the moment. Nice, good, orderly market structure going on this. Lots of decent movement down, up. You can see you probably can't see because I'm zoomed out, but there's tons of trades I've taken on this. It's a major Forex pair. There's a lot of liquidity in it. So it's very easy to trade at the moment. On there as well, long. So we've got this big propulsion move at the top here, which is basically where we suddenly started. That little bit of strength in the US dollar, which has continued. Again, good propulsion gap bounce there. Look, good propulsion gap bounces there. So it's just paying attention to technical analysis at the minute. So much more likely it's going to do that because we've got tons and tons and tons of unfinished business towards the upside on this 2-day drop that we've had. 2 days worth of strength on the US. It's probably going to unwind itself. Bit like that did. Yeah. So I'd be much more interested in longs at the moment than shorts, but it's just going up and down. So for me, it's RSI extensions. I'm just going to carry on taking RSI extensions, long, short, ADR hits if we get them. But a fundamental bias moving forward, both June. So there is no advantage either way. So we sit sideways in balance until we get a news event, which causes price discovery to find the next area of balance. Price discovery, balance. Yeah, so it's just normal trading, RSI extensions, wait for mean reversion entries. I remember last year you tried an EA trading the sentiment from my FX book or something. Yeah, it worked. I've got an EA basically which trades sentiment, which is probably not in here. Can't even remember what I called it. But yeah, I built an EA basically that all it does is it takes the sentiment from the website and it trades using that data. But, you know, it's like any, and I said this in the group last week, like any indicator, it is an indicator. Yeah. So it's right sometimes and it's wrong sometimes. So Aussie New Zealand at the moment, you should be doing absolutely nothing but buying Aussie New Zealand. Euro New Zealand, you should be buying it. Use dollar CAD, you should be buying it because everyone's shorting it, which means it's going to do the opposite because everyone's always wrong. So everyone goes against the banks. But I found it had a very high strike rate, but like everything, how do you take advantage of it? Yeah, I mean, I tried lots of different entry criteria. I back-tested lots. The back-testing is the difficult thing with this. So I back-tested lots of potential entry strategies with it. But the trouble with sentiment is it's very, very hard to back-test because it's now. So the Aussie New Zealand dollar now is a buy. Yeah. What it was 3 months ago, how do you set the EA up to trade what it was 3 months ago? There's no indicator that plots historical sentiment. So you could probably build one, and there might be one out there. There probably is. But like everything else, it's just an indicator. It tells you what's happened in the past. It doesn't predict the future. So yeah, it worked. It worked very well. I live traded it for a period of time in here. I'll have to try and find the EA. But all I did was, if it was that and the market dropped, I'd go long. Yeah. So basically, obviously New Zealand, obviously it's a long. So I was waiting for pullbacks. I was taking ADR hits to the downside only, RSI extensions to the downside only. I did a strategy where you enter on the day and you exit at end of day in the direction. So basically, Aussie, New Zealand, 97% are short, so we go long. So basically, when the market opens at 7 o'clock in the morning, I went, I'll go long. And then I got out before the market closed. Most of the time, that's right. Some of the time, it's not. It's just an indicator, same as RSI, same as stochastics, same as everything else. It works and it doesn't work. How you use that information is entirely up to you, isn't it? But what I was trying to do with it was not position trade it, because it changes. Yeah, if you look at historical sentiment, it changes. So it was difficult to find a strategy to work with it, basically. But the rule of thumb is, yeah, I mean, New Zealand dollar CAD, you know, we haven't looked at it yet, but I can tell you it's coming down. Because I know that, because the sentiment is the other way. So all it is you do the opposite. So this is 96%. I can pretty much open any of these charts and go, it's the opposite. But how do you benefit from that? How do you get in and out? So you have it gives you a directional bias, yeah? So the directional bias at the moment on the Aussie New Zealand is long, right? There's a much easier way of determining that. Use a moving average. It's the same thing. Yeah. If sentiment's telling you to go one way, there'll be a moving average that will do the same thing. All it is a directional bias filter. This is a directional bias filter that uses price rather than retail sentiment. So either you use price, fact, or retail sentiment, speculation. They both tell you the same thing. I feel like a stuck record. I say it all the time, don't I? 99% of indicators out there tell you the same thing. The RSI tells you what? Price is having a relative strength move to the upside. I know, I can see it on my chart. I don't need an RSI. If I remove the RSI from my chart, I can tell you it's extended because it's moved up a lot. Yeah, I can tell you that the trend is up. I don't need a moving average because it's moved up a lot. Price is king. Every indicator tells you what's happened in the past and lags price. No, I didn't end up releasing it because there's no edge. I develop hundreds of EAs. I mean, this is one account. Yeah, look at all these EAs that I've built. All these are just, you can't see them, can you? But you can see the text. These are all different EAs I've built to test different models of trading, different trading models. If they don't work, they go in the bin. I only release stuff that I will use myself that gives me an edge in the market. And there is an edge in the market, but it's not an edge that is any different to using, and this is no different to using a moving average, yeah? The US dollar CAD is going up. We haven't got to it yet, but it is going up. Yeah. But look at this. This is the beauty of it, isn't it? Look, US dollar CAD is going up. Where's it gone? 86% of the market is short on it, which tells me that it's gone up because they're shorting it. Why are they shorting it? You have to ask yourself the question with sentiment. Why are they shorting it? What is everybody in trading, in retail trading, trying to do? What is every system, every strategy, every course that you buy, every guru on the internet telling you to try and do? Pick the top of the market. Pick the bottom of the market. So if these guys are all short, why are they short? Because price has gone up. So they're going, oh, it's coming down. It's gone up more, it's coming down. It's gone up more, it's coming down. It's gone up, I'm bust. So all this is doing is telling you what's just happened in the market. I can tell the US dollar CAD's gone up because everyone's shorting it. And as long as they stay short, the thing I think is the advantage with retail sentiment is how long have they been short? If they've been short for 3 weeks, I'll start getting in, because if they've been short for 3 weeks and had it wrong for 3 weeks, the banks are absolutely loaded on it. They're going to have to unwind that move, aren't they? Because they won't have anybody else left to sell to. Yeah, sell to them. So I think that's where the advantage in it is. Intraday, it gives you a kind of bias which is probably going to do with a certainty, but that's the only edge I could find. And as I said, there's no point in building a complex EA to read sentiment which has to be grabbed from different brokers and put into an amalgamated thing which gives you a percentage, when you can just use a moving average. Tells you the same thing. So does RSI. RSI tells me that the sentiment on the US dollar CAD is bearish. I know that because the thing's been pushing up. The relative strength of the move is very strong to the upside. If the RSI gets extended to the upside, I can guarantee you retail sentiment is short. If it's extended to the downside, I can guarantee you retail sentiment. Let's look at one. Let's pick one using the I mean, I haven't memorized that chart in any way, shape, or form, but let's use an RSI extension of pound odd. Yeah, pound odd RSI is extended to the downside. What do you think the retail sentiment is going to be? Green or red? Pound odd. Where are we? Can't find it. I can't see it. Pound CAD. Pound yen. Pound New Zealand. Pound odd. Oh, it's red. There you go. Selling it. They're selling it. That's wrong, isn't it? That's the opposite. All indicators fail. So for me, what should be happening now with retail sentiment on this, because it's moved to the downside, you would expect them to be doing the opposite, buying it, wouldn't you? But what happened? It went up. They're probably all out. That's probably why it's not such a high number. But this is the thing. That kind of proves what I keep saying about indicators. They're all useless. All this does, all every indicator does, all my indicators do. The market reverse alerts indicator is fantastic at showing you what's just happened on the chart. Price has gone up. I know that. I can see it. It's gone down. I know that. I can see it. Yeah? They're all telling you historical information. What's happened in the past. Utterly useless, because it doesn't tell us what's going to happen in the future. There isn't one that predicts the future, is there? But this is what I found with my testing. Yeah, when you would the test, the best strategy of all my testing that I found, because I had to live forward test all this. I ran it in the live room for ages. The best strategy I found was the buy at the open, sell at the close strategy. So if this number was above, I think I used 70 or 75. If it was above 70, 75 or below 25, 30, whatever it was, like an RSI, yeah? Think of it like an RSI. There's your highs, there's your lows. If it's below this level, we do one thing. If it's above that level, we do the other. The best strategy I found was, with these ones which are above that level, at the beginning of the day, yeah, you buy it. These ones that are below that level, at the beginning of the day, you sell it. At the end of the day, you close it. And whatever you've got, you bank it. If it's a loss, you take the loss. If it's a profit, you take the profit. Overall, that was a profitable strategy. But what I couldn't do was tell you for any certainty whether it was complete luck and blind random results, because I didn't test it for long enough. Yeah. But you can use any moving average to do this. If price is above the moving average in the day, beginning of the day, you buy it. If it's below the moving average at the beginning of the day, you sell it. It's the same as this. This tells you the same as other indicators tell you. The RSI is extended to the upside. Do the same thing. Yeah. So I don't know. For me, it was a non-starter. It had promise, which is why I spent quite a lot of time developing it and testing it. But it doesn't give me. I have never found anything that gives me an edge over what I do, better than what I do. Yeah. I spend a lot of time testing stuff, developing stuff. People, I followed quite a lot of people on YouTube, not because I watch any of their content, but every now and again they'll release a strategy. Like there's a guy out there called the Transparent Trader, the bald guy, Jared. And every now and again he releases a new strategy and goes, I've tested this strategy and I've done the back testing on it, and it's profitable. And they're always daily strategies, and they're always using a get in, get out, and there's always a randomness to them. I've built EAs to back test everything that he's produced. None of it is profitable. Not that I found anyway. Yeah. Yes, there's an edge in it long term if you want to hold your positions for 3 days and return somewhere between 2 to 5% a year. Brilliant. If you're an investment bank or an institution, great. We're not. We're retail traders. We need to make a bit more than that. So they are long-term edges. But I've never found anything that replaces what I do with any more profitability. And that's what I spend all my time doing. I follow lots of people out there, and they pump out these strategies every now and again. And, there's trading courses people have done. There's guys that has these mechanical trading strategy. Yeah. I've built EAs to backtest his strategy. It doesn't work long term. Yeah. Because there is a massive amount of randomness in this movement. Yeah. Everything mechanical works if there's no fundamental. There is never a week on the planet we do not have fundamental, which will throw every mechanical strategy on the planet, every indicator on the planet out the window, because this is what drives it. So the only thing you can really do is say, our interest rate's going to drop this year on the US. Yes. Okay. On January the 1st, I'll sell the US dollar. And I can guarantee you by the end of December, if the US has done what they said they were going to do, you will have a profit on your account. How much that will be is random, because it depends how much the market's moved, and no one can predict that because we don't know what the future's going to hold. If they say that in January, and all of a sudden World War III kicks off in February, it's not going to happen. It's changed. So what do you need to be? A discretionary trader. You need to be able to change your mind, change your direction. And mechanical trading strategies don't allow you to do that, which is why when you build EAs like I do to test every strategy that is apparently profitable, you find it doesn't work. And when you look at the charts, you go, oh, crap, didn't realize Russia was going to invade Ukraine. Oh, crap, didn't realize there was going to be a pandemic. Oh, crap, didn't realize the Swiss were going to reduce their interest rates without telling anybody. Oh, crap, didn't realize the Japanese were going to intervene because the US dollar hit 150. The euro-yen mechanical trading strategy was working fine until the US dollar pushed it. Nothing to do with the euro or nothing to do with the yen, but the US dollar pushed the yen too far. So the euro-yen collapses. Your mechanical trading strategy didn't know that was going to happen because the indicator said it was the opposite direction. None of it helps. Yeah, it's random. You get in, you wait, and you adapt. You change your price. The only way to make money in this market is having the ability to be wrong and change your price after you're wrong. If you can do that, you can be wrong the vast majority of the time. As we know, that's what we do all day long. There's no indicator out there that really helps do that. So, long-winded explanation for sentiment. But it's great. Use it. A lot of people love it. A lot of people trade it and make money out of it. And again, there's indicators out there you can buy. And I'm sure there's EAs out there that you can buy. I know there's indicators you can buy that amalgamate this data and put it on your chart. But at the end of the day, it gives you an arrow up or down, which has a 50% strike rate. Is it wise to allow multi-direction trading hedging? If you want to, that's a question for you, Rahat. Do you want to trade in both directions? If you enable that setting, it will take longs and shorts when the signals arise. If you have it as false, it will only trade in one direction. Up to you. Backtest it. You know what I'm going to say. Backtest it, see what the difference is. Do you prefer getting in both directions, or do you prefer having exposure in one direction so that you can manage your exposure better? Everybody's different. New Zealand dollar CAD retail is at 96% long, and you're also in a long position. New Zealand dollar CAD retail is 96% long. You're also in a long position. Are you going to do some drawdown control? No. Because I'm not trading retail sentiment. They will be right. New Zealand dollar CAD, they will be right. At some point. I just proved the facts, yeah? Pounds, which one was it? The pound CAD. Why can I never find the pound odd? There it is, pound odd. 77%. are short. Last week, it came down dramatically in 2 days. Why did it come down though? Because of this, because of a moving average, or because the pound had really bad fundamental results? What drives the market? Fundamentals. Yeah. None of this makes any sense, makes any difference. Yeah. Go and look at the pound last week. What happened to the pound last week? We had the GDP there. We had the claimant count numbers collapsed off the back of that. Yeah. Interest rates changed, or rather didn't change. There we go. CPI figure dropped. Yeah. That's why the pound came down last week. Nothing to do with the retail sentiment numbers at all. Yeah. Retail, think about the average retail trader's brain. Yeah. Let's put them all in this bucket, this 95% bucket that the brokers tell us, or rather the world tells us 95% of traders fail. Yeah. Why do they fail? Because they're all looking to get rich quick. Why are they looking to get rich quick? Because there's a load of guys on YouTube selling you stuff that they say has got them rich quick, which it hasn't. Either they're a trust fund baby and their parents are loaded, or they're selling you something that makes them a lot of money, selling you the promise of becoming rich quick. So what are all the retail traders doing? Trying to pick the top and the bottom of the market and getting it wrong. Because what are they doing? They're looking for the holy grail of indicators that gets it right 80, 90% of the time and just continuously makes money without them having to do anything. That's retail sentiment, isn't it? At the end of the day. But none of it is any use when every indicator under the sun, regardless of last week, whether it gave you a buy signal or a sell signal, yeah, when that number came out, all the strategies that gave you a buy signal either the day before or the morning before that happened all made a fortune, and all the gurus went, hey, so good, isn't it? All the ones where the signal went short, oh, sorry, it's the other way around, isn't it? All the ones where the signal was a short, they were all going, yay, we made a load of money, isn't it brilliant? All the ones where the signal went the other way, oh, losers. So what was the odds of making money last Wednesday on that number? It was either going to come out that or that. That is what drives the market. There isn't an indicator on the planet that helps you predict that. You can predict as much as you like that the Swiss are going to do what they say. If they don't, you're buggered. There's nothing you can do about it. So, it's just like everything you see with everything with a pinch of salt. It's all going to give you the same odds of something working, 50%. It's either going up or down, isn't it? It just scares me being on the same side as retail, which with mean reversion. Then don't look at it. I don't. I'm not scared. I just had a reversal alert. And it's just retesting now. Look, the next candle, this candle here that we're on now, if it closes bullish above that line, that's going to give me an arrow on the chart. Yeah? Do you know what arrows on the chart upwards mean? It's gone up. What am I? Long. That's a good sign. Where's it going today? I don't know. But right now, it's good. We've got a W pattern reversal formation happening. And we've had a W pattern there. Market structure is shifted from a low, high, higher low, higher high to a higher low, possible higher high. Bullish. Good. What's going to happen tomorrow and today? I have no idea. It's either going to go there and I'm going to make money, or it's going to go there and I'm going to lose money. I have no control. Now, if I look at this and I scare myself into doing drawdown control today because the number here says you're wrong, and then it goes right, what does that make me do? Get cross. What happens when you cross? You over leverage, you get cross, you trade irrationally. What does that do to your account? Makes it disappear. Everything you look at will give you a contrarian view, right? New Zealand dollar CAD at the moment is a short, right? No, it's not. It's a long. Double bottom bounce. What are you talking about? All I've done is flick from that time frame, which is a short, to that double bottom bounce long. Which is right? Is retail right or wrong? What's retail on the wrong direction for? Because it's obviously a double bottom bounce in the same way as a double top bounce there. Why on earth would you go the other way? Because to go long here, you have to have a load of people with the opposite view. Otherwise, if I want to buy it, I haven't got anyone to sell it to me. Yeah. Go to the 4-hour chart. What is it? Long or a short? Right now, it's a short. Right now, it's a long. Hang on a minute. I'm on the same time frame. I've just changed my mind because I zoomed out. See what I mean? You have no clue. I have no clue what's going to happen. Doesn't matter, does it? The only thing I have control over is this. I can close it or not. I can't control this. I can't control the success of this line. I can't control whether or not that moving average crossover says I should do that or that. I can't control whether it's going to get to that or it's not. The only thing you can control is the buttons which close out trades. That's it. So you get in, you wait, and you deal with it. All you can do. You're a passenger on a bus or a train or whatever. Yeah. But your view of the market will change every time you go to a different time frame. If you're a weekly trader, I don't know what you're doing because I'm not a weekly trader, but it's not bullish or bearish, is it? So let's just assume that we're just going to continue this range. We've continued this range for the last 2 months. For the last 2 months, we've done nothing but that. Isn't a long period of time, is it? But overall, it's a sell. But every time you see a sell, it could be a buy. You see what I mean? It really doesn't matter what you use. This is the thing. I put all this information up there because it's good information to have. Yeah. But it's also information overload. This is where you see these they're memes mostly, but this, right? You see lots of things like this, right? If you put all of those, there's a parabolic SAR, there's support resistance lines, there's moving averages, there's what looks to me like Fibonacci ray expansions. Could be anything, couldn't it? Just trend lines. There's lines going on the chart like that. There's lines going like this. I'm surprised they haven't got an Ichimoku cloud on there as well, and it's not using Heikin-Ashi candles. But what do all of those tell you? Some of them tell you it's a buy. Some of them tell you it's a sell. What do you do with that information? Buy it or sell it? Harold, Euro yen's a sell. Every indicator tells you what's happened in the past, and it doesn't give you any real help. The only thing, and I keep saying it over and over again, the only thing that's going to help you is support and resistance, because the market does respect support resistance levels over and over again. Yeah, all it does. Support, resistance. It moves from level to level to level to level. If you want to use that as your moving average, do it. Nothing wrong with it. Still got the same odds as a moving average. Isn't it? 95% gamblers, 5% suffer. Study and gain experience. Study and gain experience, yeah. Can we set the position trader EA to take only continuation trades on both strategies on autopilot? Yeah. It's all explained in the video, Rahat. RSI is always the same, is always in the same side as retail. Yeah. Pretty much. To play devil's advocate, isn't mean reversion also trying to pick tops and bottoms? Yeah. Yeah, 100%. It must be sinking in now, AZ. I haven't got a bloody clue. Yeah. I come on here every day, and I've been coming on here every day for 4 years, right, on YouTube, and telling you I haven't got a bloody clue which way this thing's going. Yet I make money. The reason I make money is because I have accepted I haven't got a bloody clue which way this thing's going. That's why I make money. Because I don't know which way it's going. But what I do know is what I can see has happened in the past. I can see that it's gone down and it's gone up. And every time it goes down, it goes up. And every time it goes down, it goes up. And every time it goes up, it goes down. Then it goes up and it goes down. When it goes down, it goes up. Then it comes down. And then what it does, it just goes up. When does it go up? I don't know. So what I did was I went, okay, every strategy under the sun has tried to teach me to predict where it's going to go down from and where it's going to go up from. And none of them have been able to do it. I've been trading for 10 years and none of them have ever made me any money consistently because none of them seem to be able to pick the top and the bottom. Look at that. Beautiful. Triple top. Next time it gets there, I'll sell it. What happens? It goes up. It worked those times. Why didn't I take that one and that one? Because I was asleep. Doesn't matter, does it? But what I realized was the only reason I was losing money is because I put an order into the market to say, if it goes the wrong way, take all my money from me, please. I removed that because I knew that if this wasn't the time it was going to come down, it would go up. And if it went up even further, at some point it would come down. And if it went up even further, at some point it would come down. So all I did was remove the thing that made me a loss, the stop loss, the stop profit. So that's it. I haven't got a clue which indicator is best to use to get the most accurate prediction of market turning points, because every time I think it's the 70, it proves me wrong and says it's the 75. So I switch to the 75 and then it's the 70. So I go back to the 70 and then it's the 80. So I switch to the 80 and then it's the 70 and then it's the 85 and I go to the 85 and then I don't get any trades. So I switch back to the 70 and then it goes to 85 and it turns from there. And I get it wrong all the time. But what I do know is when it gets somewhere down here, at some point, it will get exhausted and it will go back up again. But I couldn't tell you which one's right because it's changing every single time the market gets to this level. But the only reason I get it wrong is because I tell my broker to extract money from my account if I've got this particular instance wrong. And my odds are the same, regardless of which of those I choose. Scrap the RSI, use the CCI, use the stochastics, use the MACD, use any oscillator you like. You'll find the same thing happens. Every single one of them happens. Every single one of them just goes the wrong way. So that's the only reason you make money, isn't it? By getting into the market and going, this wasn't right. Let's try that. That wasn't right. Let's try that. That was right. Brilliant. So this time it was the 90. But there's only 3 strategies out there, as we know. There's that, and that. There's a false breakout, there's a range, and there's a trend. All of them use mean reversion, but none of them are good for picking top or bottom because this double top trade here extended beyond it. It wasn't that level. This double top trade here didn't quite get to that level. So there's no way on those 3 trades you can pick a double top, but you know that there's a good chance of a mean reversion happening. So mean reversion trading is the best way, in my opinion, to trade, but it's not as reliable as anything else because there's not a trend strategy that's reliable. There's not a mean reversion strategy that's reliable, and there's not a range bound strategy that's reliable because you can't predict when the banks and the markets are going to drive in one way or the other. That's it. So yeah. Exactly. Mean reversion is not a good way to trade. Trending trading is not a good way to trade. Range bound trading is not a good way to trade. There is not a good way to trade because there is not an indicator on the planet that can tell you when is a good time to trade. We cannot time market change in direction. Yeah. And we cannot predict market direction. So if you can't predict the direction and you can't predict when the move is going to happen, what do you have left? A buy and a sell button. Use it. Pick one. Your odds are 50-50. That's it. That's all you know, and that's all I do. I come in here and I say, there's a good chance that the Aussie dollar CAD, if it gets up to there, is going to drop. But what's going to happen is it's going to hit that and it's going to do that, or it's going to hit that, do that, and do that, and then it's going to hit that and do that, or it might come up and hit that and do that. It's going to do one of those things if it goes up. If it doesn't go up, it's going to come down and it's going to hit these bottoms and bounce. If it doesn't do that, it'll hit the propulsion gap and bounce. If it doesn't do that, it's going to come all the way down to the 2-month low and it's going to bounce off of that. That's what's going to happen. 100% guaranteed. Come back in a month. That will have happened. Which, I don't know. When? I've no idea. But I know that that will happen somewhere along the line. So if I can get in here and be wrong and move my price to there and be wrong and move my price to there and be right, what am I right? Brilliant. That's it. So all I need to be is right, isn't it? Not wrong. Because if you're wrong, you lose money. If you're right, you make money. So what's my job? Be right. Not to pick the top and the bottom of the move. Be right. Make money. That's what the banks do. Banks don't know when it's going to move from there, because when they get there and they dump 25 million into the pot and go, let's short it, guys, and HSBC come along and go, nah, 50 million long, and it pops up there, right? The other bank goes, crap, we're wrong. Do you think they'd take a loss? No. Again and again, and they wait for it to come down. Is that bank's going to run out of money at some point? When they do, they'll overpower them and drive it back down again. We don't have that power. We have the power to press that or that. And then when we're happy with it, we press that. All you can do. So yeah, you're right. Mean reversion, terrible. But somebody's showing me something that isn't. I've said it many times. I'll snap your arm off. If someone comes to me with a strategy that I can backtest over a period of 20 years with multiple different settings that never loses money, I will snap their arm off. But I've been looking for it for 15 years and never found it. So I've just found out a different way. That's all I've done. Nothing clever, is it? Don't mind me triggering you sometimes. I learn more from when you're on a rant. Yeah, well, you're not triggering me. I'm just explaining the situation. Yeah, there's no one else on YouTube that comes out and says they haven't got a bloody clue because they're gurus. Follow me. I know what I'm doing. Buy something from me because I know what I'm doing. Yeah, I come out and I teach people stuff. I tell people what I think is going to happen. I have a load of products you can buy if you want to. That's great. That's your way of paying me for free education. But I don't make my living doing that because I don't sell enough of them. Because none of them work. Yeah, none of my products work. The market reversal alerts EA is terrible. The reversal alerts indicator is terrible. It always hits that, goes that, does that, and it comes off the chart. It repaints. It's awful. It's the biggest repainting indicator on the planet. People that are in here that have been trading for less than a year are going, repainting indicator, but you can't make money with those. Sorry, have you found one that does? All this does is tell you what's happened. Same as everything else. They're all terrible, but they're all brilliant. This propulsion gap tells you that price is going to return to this level with a very high probability. Sometimes it won't. So if you go long down here and you target that level and it doesn't hit it, don't blame me. The market. I don't know where it's going. What I do know is it moves a certain distance every day and I can measure that and I can measure what it's done in the past and I can see what it's done in the past. I have nothing more to give you. That's it. Like Boris Johnson during COVID, go to work, don't go to work. Nobody has a clue. Yeah, I am the Boris Johnson of trading. That's a brilliant analogy. I like that. Go to work, don't go to work. Go and eat out, don't eat out. Wear a mask, don't wear a mask. Shake hands, don't shake hands. Lunacy. Because what? What were we in that situation in the pandemic? A random, unprecedented time. We'd never been there before. This candlestick on the Aussie dollar CAD, right? This pattern that you can see here on the Aussie dollar CAD. What is this? An unprecedented point in time. Why? Because this has never happened before. Go back now, somebody, at some point, email me if you want to, send it to me in Discord or Telegram. Go and show me a day in the past history over the last 20 years when that price action has happened on the Aussie dollar CAD. Yeah, those exact candlesticks in those exact formation have happened before. Show me. Never. Hasn't happened. I've tested this. I've built EAs to model this. I've built EAs that have looked at price action candlesticks over multiple time frames, tried to find the same pattern again in the past, and I've only done it over a year because I couldn't have the processing power to do it any longer. It's never happened. There has never been 2 days identical in the market ever. This candlestick you're looking at now has never happened before. Distance of that wick to that wick, this body to this body, following a candle that had that wick, that body, and was lower than the high or higher than the low of the day has never, ever happened in the past. How could you possibly predict what is going to happen next? How could your indicator have any clue? Can't. It doesn't happen. It's not possible. Don't care how many gurus tell you it is. It's not possible. Time machine. What we're waiting for. And then everyone will have a time machine. So how the hell does that work? If everybody's going to be right, no one's going to be wrong. You can't have somebody take the opposite side of your trade, because if we know it's going up, surely if we go into the future, know it's going up, and we come back into the past, and we all press the buy button, no one's going to be there to sell it. So how can we execute the order? The paradox begins. Time travel is not going to work either, is it? Trading's just not going to happen. Can't do it. Give up. There comes a time when you get tired of losing. Neither you give up or actually learn how to trade. That's 95%. The 95%, that's retail. You buy every indicator under the sun. You read every book under the sun. You do every course under the sun. None of it works. You give up. That's what 95% of people do. I'm planning this new course that I'm putting together, which I've been putting together now for months, basically. I'm just amalgamating a document full of everything I want to do videos on. As a kind of A to Z thing. But one of the videos in there is kind of the retail hunt for the Holy Grail and why we all give up. And there's a point in that video which I kind of have planned, which is going to be, if you're watching this video, yeah, and you've been in this industry and you've been part-time trading for anything longer than 3 years, you're the 5%. Because 95% of people will have given up by now. And you have had a modicum of success, but you haven't quite figured out why you haven't had a lot of success. And that is what I teach. The reason is because you have found a way to control risk to such an extent that you've stopped losing money, but you can't make money. And there's one little tweak that needs to be made. One little tweak that needs to be made to suddenly turn this strategy that you've got that for some reason doesn't hemorrhage cash at some point, turning that into a profitable strategy. Really easy to do. Just turn it into the way the banks do it. Position trading is just, but that's what 95% do. They give up because there's only so many times you get punched in the face and go, screw this, I'm not getting that, not doing it anymore. Or you go bankrupt. I tried the DOW and NASDAQ account for futures. You can hedge and have 1 million in equity. Lets you trade 7 pairs, all US dollar based, and 3 indices. Very good. Good luck. Sounds like logic to me, yeah. SIH on the indices, unfortunately, there is no light martingale on futures because of the fixed contract size, yeah. I don't trade futures anymore, so can't change your contract size, only in increments of 1, which is martingale, basically, so you can't do it. I think John Wick needs a chat with Boris. Yeah. Yes, we need that. Now I feel special, 6 years and still going. Yeah, it's good. But this is it. It's like Dougal's just said about Darwin X has very low leverage. It's a UK-based broker. The leverage is 1 to 30, 1 to 10 on indices probably. You can't position trade with that leverage. Yeah. So again, they dangle the carrot. I can't draw carrots, but let's say that's a carrot, right? Yeah, that's a carrot. All right. There's your dangling carrot with $1 million on it. Yeah. You can have it if you can learn to trade with 1 to 10 to 1 to 30 leverage, which no bank on the planet has ever done, in a way that the banks need you to trade to make money. Or you could use a stop loss and low leverage so that we will margin call you and you'll never get that million. Darwin X are a great broker. I've had an account with Darwin X for a decade. I've traded with Darwin X for a long time. Very, very, very good broker. They are not a prop firm. They are an investment platform. Darwin IA is an investment platform. Darwin X is an investment platform. They require very low risk, very low drawdown to give you any funds. Your strategy won't allow you to do that. Same as prop. So just be aware. No one's going to give you money and any decent amount of money with any strategy that is going to work long term. It's just it's got to work long term. It's got to be very, 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 very low risk. Yeah, anything that's going to make decent money, not going to happen, unfortunately. But, right, pound. We've done the euros, and then I went off for waffle. Pound. We've got 84 people left. Good going. While you're here, hit the thumb. So basically the pound pairs are very much the same as the rest at the moment. Interest rates coming down June, hopefully. We had the drop in inflation last week. So it's all good. It's all going in the direction that we want it to. A little bit faster than we're anticipating it to year on year. This is what I was saying about the Aussie release this week. It's a year-on-year figure. We very, very rarely get a differential more than 0.1% on a yearly figure. So with the Aussie CPI that is coming out this week, we flick through my... with this one coming out this week, it's a 3.5 forecast off a 3.4. 3.4, 3.6 is really the differential that we should expect to see. There's no advantage either way on either of these. Totally range bound. Short it when it goes up, buy it when it comes down. Yeah. So I've had 4 shorts on this, all one in, one out. I've had one long, which I got out at break even, but I could have taken a profit on it. I had another short there. I've just got in long, got out on Friday. Long short, long short, long short, up, down, up, down, up, down, range bound. Same thing. So if you get an RSI extension to the downside, which will be down at this monthly low, long it. ADR extension 150, long it. Anything up here, short it. There's no fundamental bias either way at the moment. Pound CAD, got long on this at the moment. It's, you know, same thing over and over again. Balance, price discovery, balance. It's just up, down, up, down, up, down. Same as everything else. Again, no fundamental shift, no bias either way. So you're going to get big news events like CPI that are going to drive it in one direction, then it'll undo it and come back to the propulsion gaps, fill the inefficiencies that we've got in the market, the unfinished business the banks and institutions have got. They'll come back and they'll get those gaps done. So big propulsion gap to the upside. I've got a long on it at the moment. As you can see, I'm looking to get out on that propulsion move there. This is the previous news release from the Canadians, which drove it long. So there is a chance it will come back down into this area. So if I don't get to target and it comes down, I'll be getting an extra one in there and obviously get out when it bounces out of this area. But right now I've got longs on. I'm looking for it to push up on the pound drop from last week. So just undoing that move, but not looking for masses. Anything you target, which is a 50% retracement or lower, has got a much higher probability than further up. So targeting that area there. Pound Swiss. So they have done the complete return to origin move. 2 days it took to undo that Swiss move. Basically because obviously the pound weakened. So very, very, very hard to call this one. We are undoing the news blip and grinding. So I suspect, like with all the Swiss pairs, we will see weakness long term, Swissy, and it will continue to move up. So doesn't mean you can't short it. You see I've got 2 shorts here, one there, one there. Yeah, this is the beauty of mean reversion in a trend. Yeah, there's not many people on the planet that would look at this and go, it's trending down, it's trending up, right? I'm mean reverting the opposite direction to the trend. Absolutely fine. There's 2 trades there, both made nice profit. Yes, they lasted a week. Yes, they took 3 or 4 positions, but you can mean revert a trend because in a trend, the market does that. Each of these mean reversion plays is an opportunity to profit. So continuing in its uptrend, I suspect. So any moves to the downside, which come down much harder, I'll be happy to long them. Pound, not really any reason to be bullish because inflation dropped higher than expected, faster than expected, so it's bearish. Swiss dropped their interest rates. It's bearish. So a bearish currency against a bearish currency means no movement. Yeah, pretty much what we've been having. 2-3 weeks, nowhere. Price discovery. 2-3 weeks, nowhere. Price discovery, not sure. Wide expanded range, maybe. I don't know. Pound yen, short. I'm out of the pound yen on Friday. So got out of that one there. Same thing with all the yens. I want to be selling it. I've been wanting to be selling it when we got to this level because the US was looking like it was going to sell, but the pound had a bit more strength. So this one rallied up a bit more, which obviously I got out of a mess, which lasted for 3 months, but got out with a profit. Just not very nice and easy. So yeah, shorts on this one. So any kind of pushes back up into that propulsion gap, I'd be looking for shorts. Any RSI extensions to the upside, I doubt we'd get that because to get RSI extended, you're probably going to be getting quite high up here. But any RSI hits to the upside, any ADR hits to the upside against the yen, be shorting it. Beautiful M pattern reversal. Yeah, classic example of indicators working and not working. This is textbook. If I needed to show somebody an example of what the market reversal alerts indicator is designed to tell you, that's it. It's an M pattern reversal. Lower high, M pattern reversal, breaking structure, short. Market structure shifted to the downside, off we go. Absolute textbook. You go short there and you get out at some point. The out is impossible to predict. W pattern. In the opposite way. Yeah. Absolutely textbooks. Pushed down, pushed up, pushed down, pushed up. Brilliant. Not very uniform, is it? That is brilliant. That's a mess, but it's still a W pattern reversal. But if this now pushes down below that low, that disappears, and we now need to monitor the new structure for the next signal. Failed signal. It doesn't know where price is going. It knows what's just happened. Yeah, nothing knows what's happening in the future. But we know that the sellers are on board. This is all this indicators. This is all I built this for, was to show me when I should be selling, because everyone's selling. You want to get on board with the market. The market's going short, sell it. Yeah. That's all it's doing. It's designed to just show you what's just happened in the market. So the odds are, because these guys sold it and then the buyers failed and they sold it again, the sellers are definitely in charge. Let's go with them. Right? That candlestick happens, a news event happens, and it does that. Nothing to do with this indicator whatsoever. The sellers there all get run over with me. The news changed. So yeah, pound yen is a short. Pound New Zealand, weak at the moment because of this New Zealand move. As you can see, they've added into this multiple times. We've got a new propulsion gap formed there, which was a break of that high. So it's this high that got broken with that propulsion move. They haven't tested this yet, so that is where I would be targeting with a short if I was short. That overall, I think, is probably an achievable target. We've had weakness in the pound off the back of the news. At the moment, there's no strength in the New Zealand dollar whatsoever. So you've got something that is weak against something that is weak, meaning that we're not really doing anything. So that is where I'd be looking to go, but I haven't got a reason to get in at the moment. So ADR hit to the upside, double top, short, back down into there. That's what I would be looking for if it happens. Pound US dollar, got one long on that one at the moment. Hasn't gone anywhere since I got in on Friday. Again, just looking for it to push back up and do a percentage of this move, looking for a 50% retracement. So high, low, lower high, lower low, lower high. Prediction, one of those is going to happen. It's either going to do that or it's not. And if it doesn't, it's going to go down and test this low down here. Yeah, in which case then, as you can see, the EA has got my next long there. So if it does push down into this level, I'll be taking a second entry, moving my price down, and then waiting for an exit on that entire leg, because I don't know which way it's going. New Zealand dollar CAD, longs at the moment. We've looked at this one already. We're down at a nice support bounce at the minute. We've got a W pattern reversal going in at support, which is either going to turn into an accumulation break or it's going to pop back up and test this level or test this level or hit that propulsion move and drive back down from there. Yeah, one of those. At the moment, it's working nicely. So yeah, my exit on this is 125 ADR, so it's not the best average to have because I'm bang in the middle of this propulsion move. So when we do test that level, I think there's a good chance that we'll get some sellers entering the market. So what I'll probably do is scale out of that one and probably remove that one just to reduce the size on it when we get there. So take a partial profit, do some drawdown control, and then see. But I've only got 4 positions on it, and I've only been in it for a week. So it's very low exposure at the moment, 1.6%. So it's not worth doing anything with at the minute. Same with New Zealand Swiss as all the other Swissies. They've undone the move very, very quick. So this was within 24 hours, we were back undone totally, that Swiss franc movement. So we're back to where we were before the news. Yeah, so this Swiss news, there was no continuation on it whatsoever, which tells me that the market, when I said, the market was factoring in that Swiss franc rate reduction before it happened, kind of tells me that this was expected. But now they've dropped the rates. We should probably continue with a weak bias on the Swiss franc. So you'd be better off, I think, longing everything against the Swiss at the moment, unless obviously the fundamentals shift on it. But so RSI extensions to the downside, ADR hits to the downside, double bottom bounces, that sort of thing, reversal alerts at logical areas, basically, looking for targets to potentially get driven back out of as your TPs. New Zealand yen shorts got out of the New Zealand yen on Friday as well to reduce the exposure on the yen. So again, same as before, beautiful propulsion move, retest, add. That's your new propulsion move. So be looking for shorts at 150 ADR, 125 ADR, RSI extensions to the upside if you got them. Looking for short opportunities. We're talking about different types of strategies, yeah? You got range-bound strategies, you got breakout strategies, which will either not go anywhere, turn into ranges, or they will fail. And then you've got breakouts which succeed, which become market structure trends. Yeah, so those are the 3 strategies. There are only 3. It either goes sideways, it tries to get out and fails, or it goes into a trend. Yeah, where we are here, you've got 2 opportunities. You can either wait for a pullback to short it, or you could take a break of the low today and a break of this low here and short it there. What's that? Breakout. So you can take a breakout trade, assume it's going to come back and retest and continue on its merry way down. Yeah, that could happen as well. That's not what the market reversal alerts indicator is going to tell you, because it's a reversal indicator rather than a breakout indicator. But if you take a break of that low, you can use the market reversal alerts EA as a breakout indicator by doing the opposite. Yeah. So when you get a reversal alert, you don't take a short when you get a reversal alert long. What you do is when that trade is invalidated, that signal is invalidated by that low being broken, that will disappear. Use that disappearing as your signal, because it's not market structure long. Sure. New Zealand dollar, US dollar, sideways. Very, very sideways. We have just broken out now of the low. I've drawn an orange line on the chart there for some reason. No idea why. If you want any proof of support resistance working, there it is. I drew this line on this chart last week because of that low being respected multiple times, and I said that is a good strong area that price has respected. There. What happened on Friday to the pip? Actually, it was not on Friday, was it? It was during the swap overnight, so not really to the pip at all. But it was to the pip on the swap. But yeah, so we bounced straight off of that line. Whether or not it's going to hold, I don't know. But yeah, so New Zealand dollar, US dollar. Again, the difficulty with the US dollar at the moment is we know we're going in June. We're going to drop interest rates. which is going to drop the US dollar. So what's the market going to do until June? Are we going to continue to weaken the US dollar, or are we going to weaken the US dollar for a while until we get to June and then really weaken it? Or are we going to sit sideways on the US dollar and do nothing until we get confirmation? And then gradually, as we get closer to that area, we'll start to weaken the US dollar. So it's very difficult to call, because at the moment, this thing's going nowhere, the New Zealand dollar, and the US dollar's going nowhere till June. So what do we do with it? Either just buy it if it gets down here, as I did there, or sell it if it gets up there. No reason why either of those shouldn't work at the moment, because market has got no directional bias. And again, the US dollar, same here. You can see there's tons of trades on the chart here, where I'm just getting in on the extensions and getting out as we stay in our range. So US dollar CAD, very close trade partners, goes up and down all the time, because when the US moves, the CAD moves. So when you get a strong news event, you tend to get more of that. So yeah, no bias on either of them. So buy it, sell it. If it moves up into these highs, short it. It's a good short right now. Back down into here. Yeah, this area here, we're not interested. It's a sell. Hang on a minute. I just need to check whether I've got this set up right, because I don't know how it's set up. So yeah, kind of like the look of that, where we are there. Basically, for a short out of this area, straight back down into there. We've got no news this week. So there's an argument for literally just shorting it at that level. So there we go. Short. First entry short. Target. I'm going to go just down above that level there. But I'll see what the P&L's like as we move down. Next entry short will be if we get towards ADR today. If you look at it on the 4 hour, basically we're playing this high here. So it's this high here, which is this previous low. Yeah. So if that pushes out of there into that propulsion move, which is these lows here, we'll look for another short. Other than that, if this is going to break long, US dollar is going to come back up and retest this area up here, isn't it? So it'll be a scale in up to there and out. So like, look at that. Range bound at the moment. Perfect example of the use of the position trader EA. It's not extended on the RSI. It's not extended on the ADR. I just fancy it. It's a support resistance bounce play. Look. Hit the short button. Now the EA on the VPS is going to take over, and it will just scale in for me automatically. US dollar Swiss. Did some drawdown control on this one on Friday. So got out of that position on Friday and got out of another one on Thursday, I think it was. Yeah. Had to reduce some pressure on the Swiss franc, a little bit overexposed on it. So still got shorts on it. Whether or not the Swiss franc is going to power up or not, we'll have to wait and see. But stuck in this one at the moment. So at the minute, it's quite probable that might happen. However, with the Swiss franc, the move on the Swiss franc after that news has not been strong on any other currency apart from with the US. So I think overall, long term, it's going to be one of those, but it's going to be a grindy kind of move. So all we need is negative news on the US or a positive call from the Swiss. They don't ever say anything, but so yeah, shorts on that one at the moment. It's extended, but I've been in this since all the way back here. No, not there. That was an exit. Back in February. looking for a play back down. We didn't get one. We just got a flag sort of towards the upside, then more news, which did get undone. Then we went sideways for an entire month. And then we've just pushed out on that Swiss franc news. So when you look at it, the initial play to go short into that propulsion gap, we had a week's worth of movement, 4-5 weeks worth of sideways, and one news event. That's literally all that's happened since I got into this. A grind, nothing, and a bit of news. So it's just one of those positions I'm in, I'm stuck in. I haven't got a lot of exposure on. There's not a massive amount, a lot of size on it, but it's just not going anyway. So I'm still short. I need to move back down into here to come and retest to get out. So if we can get down to there, if the P&L is looking good on other things, I will probably just shut the whole thing out and just go, that didn't work. 2 months, no loss, just get out. There is a bit of loss in there, but there's a bit of profit in there as well, look. So, you know, this is, again, one of those ones where I took a profit there. I had a little buy in there that I took a profit on. Bit of profit there. Little buy there. I think that was meant to be a break even, but the news stopped me out with a loss on it. So overall, it doesn't really owe me anything. So I'll probably just get out on a break even. And US dollar yen shorts. At some point. Potentially. I'd love an intervention from the Japanese. I really would. That'd be fantastic. But I get the feeling we're just going to grind around a little bit like this. And then it'll get bored and then it'll spike and then it won't. And then we'll see. We'll see what happens. Just have to sit and wait with the yen, unfortunately. Morning. I'm having a problem with the system indicator. It does not want to respond or appear. You're not giving me anything to go on there, Tammy. I've no idea. Uninstall it, reinstall it. Turn it off and on again. It's an indicator. Literally, you just drag it onto your chart and it works. If it doesn't, there's a problem. Remove it, delete it, re-download it. That's all you can do. Thanks for the great analysis. Trivial question. Do you have a dark MT4 template? No. But you can make one. I trade with white charts, but click the computer, reboot. Yeah. No, I don't, but you can make one. Everything that I have, and well, not everything that I have is color changeable. But you can change most colors on most indicators. I'm just trying to think of ones that you can't. I think the support, resistance, propulsion, you can't change the... no, you can change the lines. Yeah, you can change the color of pretty much everything. That can be changed. That can be changed. Yeah, you can make a dark one. Just trying to think of anything that can't change really, but yeah. I provide the indicators. I don't provide the templates for everything because, you know, each indicator is an indicator in its own right. It does something. A lot of people use the indicators in their own systems and strategies with doing totally different things to what I do. So, you know, you just put it with whatever you want. They're all sold individually because they all do different things. So some people don't use the market reversal alerts indicator, but they do use support, resistance, propulsion. Some people use the market reversal alerts indicator, but they don't use support, resistance, propulsion. They use a parabolic SAR or something, or they use some other indicator that isn't the RSI. You know, this, like I said, indicators are indicators. They show you historically what has just happened on the chart, and they give you information about what has happened in the past. Doesn't matter what combination of them you put together, you will have a strike rate for historical data. That only. That's it. What's happening next? All it's doing is telling you something. Yeah. Indicators are great for giving you, for simplifying your life. But at the end of the day, if you get any chart like this one, you can tell when it's extended on RSI and when it's not extended on RSI. I can tell you there's RSI extensions here and here because the market has moved a long way. I can tell you there's a market reversal alert. There's an M pattern reversal in there because I can see it on the chart. I don't need an indicator to tell me that. But people, when you're learning to trade, when I was learning to trade, I needed indicators to tell me everything. Is this going up enough to be above the 20-day moving average? Yes, it is at the moment because I can visualize what a 20 moving average is looking like on this because I've seen thousands of them. But you don't need a moving average to tell you that it's in an uptrend. Market structure. Yeah, it's just one of those things you either see or you don't see. And it's never the same. It's different. Some people will go, no, you missed that one. Yeah, and technically you're right. But I couldn't be bothered to smooth it out into just that. But there is market structure in there as well. Yeah. So all an indicator is doing is helping you to decision make. That's it. You don't need any of them. So I don't provide any real, this is what I use. But I don't provide a template that has everything on it because not everybody uses everything and you don't need everything, do you? I'm not even convinced, it's a lot of the stuff I see on my chart. People have messaged me in Telegram watching the live stream today. Why didn't you go short on US dollar yen? There was a reversal alert. Well, because I didn't fancy it. Because it doesn't meet my strategy based on what I think is going to happen to the yen. But the indicator said to do it. The indicator said to jump off a cliff. Would you go and do that as well? Probably not. Because if I go long on the yen, I'm probably going to get hurt. So yes, I should be going short on it. But there's a million reasons to take a trade. But none of them are going to tell you which way it's going to go, are they? So might get out of this pound CAD. We've gone nowhere all morning so far. And I kind of want to bank some money. I've got pound exposure long against the US dollar. So the pound CAD and the pound US dollar are very similar trades with very similar exposure as well. So I think I'm going to get out of the pound CAD flat. Oh, no, it's one trade. Sorry, that's a dotted line. There is no trade there. Ignore me. That's just a 1 in, 1 out. 0.5% banked. And I'm going to let the pound US dollar run. That's got a hell of a lot further to go. Look. Right, well, that's it for this morning. Might go and set up an EA to test this strategy this morning. Looks pretty good. It's a strategy. Oh, this is even better. Look at this. Oh, how could that even possibly fail? Look how many confirmations you've got there as to what to do. Yeah. When you can draw a line between two stochastics and the stochastic is embedded and that line is green and you've got a green thing on the whatever that is, and the MACD is also green, and you've crossed above a double top high on the 4-hour chart, and you are beyond 7 o'clock in the morning, and your dog farted. Can't fail, can it? Look at it. Look at the confirmation you've got there. I don't know why I'm fixated on my dog at the moment. I keep talking about my dog puking as to whether or not I should go long or short. I think it's my dog needs to have something wrong with his stomach at the moment. I always ask myself why before taking a trade. Never lie to yourself. Yeah. But you question yourself as well. This is the other thing about you can tie yourself up into knots with indicators. Which is why everyone goes, oh, anybody who's using indicators is an idiot. You should be using a bare naked price action chart. You should. Because this is the only thing that really shows you nice and cleanly what price has been doing. You suddenly stick 10 indicators on it, and the thing's a mess. It is, isn't it? But, you know, part of the new plan I've got for my videos is one of them is going to be on candlesticks, because I realize I've got nothing on candlesticks. I have got a candlestick pattern, but again, that's all a load of rubbish. You know, candlestick patterns. They're not a load of rubbish. They are. I mean, you know, shooting stars and hammers, and you know, shooting stars are great. They do tell you when there is exhaustion in the market. But there's only 3 outcomes to a candle. It can be bullish, it can be bearish, or it can be neutral. Yeah. So every single candlestick you see on this chart now tells you one of 3 things. It either opened and closed higher, it's bullish. It opened and closed lower, it's bearish. Or it opened, went higher, went lower, and closed roughly around the middle. So there's no idea. So it either went up, it went down, or it didn't really go anywhere. How does that help you predict the future? It doesn't. If it's gone down, the next one can go up. Hey, a massive bull candle, buy it. Oh, why did it go down? Because it had gone up. But if it goes up, it normally goes up. We'll do it next time, and it might do. Hey, it's gone up. It went up again. Brilliant. I'll do that again. Oh, it went down. Every time. Right. I'll be back tomorrow. That's the indicators on Greg Secker's platform. Greg Secker's platform. I haven't seen it. Or I've seen screenshots of it. I don't really. But from what I understand from people that have had his platform, it's basically trading for dummies, isn't it? So it basically is a load of automated. It's basically a load of EAs, isn't it? But they don't trade. They just give you a signal. So it's a load of strategies he's basically cobbled together, which paint an arrow, and you press a button, and then it either works or it doesn't work. But the woolly bit is it moves down, and it's always claimed as a victory, isn't it? It moved down. It moved up to there and stopped me out. Why didn't you take profit there? Well, because it didn't move far enough. Yeah, but look at that signal to go long there. You should have gone out. Hindsight, I can tell you exactly what to do in a chart that's happened. I can say, look at my exit there. Look at that. What a beauty. I got out there. Then the market collapsed. Was that the right thing to do? Yes. Was it the wrong thing to do? Yes. Why? Because the bloody thing went 3 times further. 5 hours later, 6 hours later. That was the wrong thing to do. No, it's the right thing to do. Every single trade you take has a right and a wrong answer. They're all right. They're all wrong. Yes, I banked money. No, I didn't bank as much as I should have done. Discretion. I think that's kind of what his platform and his systems and his strategy and his course teaches you, doesn't it? In a nutshell, the thing goes up and down, and if it went down and you had a profit and you didn't take it, you're an idiot. You should have done. But your system didn't tell me to take it. My system just tells you what direction it's going. I don't know. I've never been on the course. I just heard from people that have. Candlesticks are just another indicator. Exactly. Think about what a time frame is. Yeah. All a time frame is a visual representation of price over time. So on a 4-hour candlestick, there's a 4-hour bearish move on the pound US dollar. A daily bearish move on the pound US dollar there. You go down to a 4-hour chart and look at the same thing, and you've got all these candlesticks making up that same big candlestick that we just saw. And within that move, there was a little pullback. There wasn't actually on the hour. No, it was that day, wasn't it? Was it that day? Yeah, that day. So yeah, there was no pullback on that time frame there. But if you go down to a 5-minute chart, there's little pullbacks. Yeah, if you go to a 1-minute chart, you could have traded those long and made a load of money. All it is, a time frame, is price over time. But it's just telling you what has happened over that period of time. It doesn't help you in any way, shape, or form, does it? Just because people have been selling for the last hour doesn't mean they're not going to buy it for the next hour, does it? It's an indicator. It indicates that for 1 hour, they bought the crap out of it. What are they going to do for the next hour? I don't know. Should I be in this long? Should I stay in it long? At the moment, for the last 3 hours, I'd say yes. If that happens in the next hour, I'd say no. So ask me now, yes. Ask me in an hour. It's an indicator like anything else. It's just told you what's happened. And it's telling you what's currently happening. At the moment, the buyers are in control of the market, but the sellers are pushing back. The beauty of candlesticks, they show you exactly what's happening. The buyers are in control because it's green, but the sellers are pushing back because it's pushed all the way up there and it's pushed back halfway. So where are we at the moment? Bullish, but unable to make progress. Bearish, unable to make progress. Indecision. An indicator that tells you that the market has, at the moment, not got any clue whether it wants to go up or down. Indecision. Doesn't help you in any way, shape, or form, does it? Nothing helps you, does it? That's what kind of the whole theme of this session this morning has been, isn't it? Nothing helps you. Press the buttons. Thanks, always an insightful session. Yeah, good. Okay, we'll be off now and back tomorrow. So this week's live room schedule is very light because we've got 4 days this week and 4 days next week because we're not here Monday. There's no news, so I'm not going to bother doing tons of sessions just for doing tons of sessions' sake. I'm going to be working on my analysis of ADR and other things. So tomorrow we're going to do 145 because we've got consumer confidence at 2 p.m. Wednesday, we've got the Aussie CPI coming out overnight, so I'm going to do a morning session on Wednesday. Thursday, I'm going to do a 12:15 because we've got the CAD GDP numbers and US unemployment coming out at 12:30. So there's only 4 sessions this week. Those 3. So this morning, an afternoon, a morning, an afternoon. So the US people will be happy and UK people will be happy and everybody's happy for half the time. So yeah, so then obviously we're not here Friday. So we'll see what happens. But it is an end of quarter week. So we might get some crazy moves as they start to unwind quarterly positions. So we will see what happens. We might have absolutely nothing. It's going into Easter as well. It gets quiet. We have the Easter break coming up. School holidays are starting to happen. So it does start to cool a little. So we'll see. But yeah, that's it at the minute. I'm going to do a video on the Position Trader EA as well. I might try and get that done today, if not at some point this week. So I'm going to show my exact setup with my VPS, how I have everything set up on my VPS, why, and how I have it set up on here. You just saw me take that trade on the US dollar CAD today using the button. Yeah. And now the EA is managing that position. So I'm just going to do a setup video, if you like, to show how I'm using the EA and why I'm using it that way. So if we find the US dollar CAD somewhere on here, which will be at the end somewhere, I guess. Yeah. There we go. The EA, that's the trade that I took on the terminal. That's the TP that I put on the terminal that I just took this morning. The EA is going, okay, I've seen you take a trade. That's your next short. I'll monitor the price for you, Lee. And when we get above that level, if we get above that level, I'll manage the position for you. And then if we push down by 2.5% after I've got into 2 trades, I'll get you out. All right, Mr. EA, thanks very much. So I'm going to do a video basically explaining how I have it set up, because I think a few people are getting confused with this button trading only functionality. So I just want to kind of explain exactly what is going to happen with this trade, with trades, and how it works. So it's hopefully clear. It is quite important. All right. So I'll be back tomorrow afternoon. Anything you need, I'll be in Telegram and Discord. If you need anything other than that, fingers crossed we get some movement this week of some description. So just waiting for stuff to happen. All right. Have a good one. Anything you need, let me know. Otherwise, I'll be back tomorrow afternoon.